9:45 a.m. Eastern Time, we have the US S&P Services PMI final, forecast 55, prior 55, with a range of 55.5 to 54.8. US S&P Composite PMI final, prior 54.8. ECB's Lagarde says the ECB to present bank simplification proposals December 11th. Besant says Fed presidents were meant to be from their district.
Alrighty, good morning, good morning. Happy Wednesday, Lynette. Trading Pennies, good morning. Bharat, good morning. Good to see you guys. My P&L is looking pretty ugly, so I just hit it. I got a bit unlucky with this news drop here, guys. I was overnight trade last night.
Besant says certain sectors of the economy have weakened.
My order
interest rate cuts.
My order missed by like 5 points. Looks like 4 times. So yeah, and funny thing is, the minute I woke up and I opened my phone just to see what the market's doing, the minute I opened up my phone, opened up the chart, 5 seconds after I open up the chart, I start seeing this dump. And I was like, no.
Besant says, I'm very optimistic
you know what
about the
happens.
economy next
You take
year.
the risk,
CapEx is up.
and then something unexpected happens. Some news drops or whatever. For those of you guys that aren't aware of what dropped, it was
Besant says China is the perfect candidate
the exact wording.
Soil buying goal.
So Microsoft lowers AI software sales quotas. So that's the news. So basically it was just Microsoft selling off a little bit. And yeah, that impacts the market quite a bit.
Besant says China on track to keep every part of the deal with the US.
So I went long down here. Hopefully, and hopefully this doesn't make a lower leg down. If it does, we might have to reset, continue the grind. But trying to play the risk, a little bit risky. Like if I was at my computer right when that news dropped, I would have flipped position really quick just to take advantage of the panic selling. But unfortunately, I wasn't.
Besant says he won't answer hypotheticals on China-Taiwan invasion. Besant says Taiwan should view US position as unchanged.
Yeah, this needs to hold for us.
In
We're
5
pretty
minutes time, we're
leveraged.
expecting the US S&P Services PMI final forecast 55 unchanged from the prior, with a range of 55.5 to 54.8. US S&P Composite PMI final prior 54.8.
Still looking bearish.
Besant says the US is a very
Need
good
it to
ally of
hold,
China
though.
and Taiwan. Relationships are unchanged.
Nice. Need this to push up, break above 540. That's a key level. 540 needs to get above, stay above.
Netflix shares down 4.7%.
A little bit of selling channel here. This selling channel comes down all the way to here. That's it. That's reset territory.
Netflix shares fall more than 5%.
I'm thinking like we could technically close here. Hope for maybe better entry, or just watch and wait and see. If we wait for confirmation, then we have a worse entry. But if it dumps, if it makes a lower leg, we're safe then. Staying bearish though. Staying in this selling channel. Needs to break above.
Besant says the Biden administration failed to de-risk with China. One minute remaining. I'll be leading with US S&P Services PMI final.
We're about to have services PMI is probably gonna move the market. Yikes. I mean, too late to decide now. This was the moment right here to make the decision to cut and wait.
Besant says single biggest point of failure for global economy would be disruption of chips shipments from Taiwan. 10 seconds.
Let's just hope we don't get a wick So we got services
54 spot
PMI.
1, 54 spot 1, lower than forecast of 55. Composite 54 spot 2, 54 spot 2.
Uh-oh. Uh-oh. Uh-oh, selling pressure. If this dumps here, like next key level would probably be around 25,250. So we'd most likely be looking for sweeps of this level here.
Best sense says private credit growth, a sign bank regulation is too tight.
We have posted out the US S&P Services PMI November 2025 report on the feed for you to read through.
Is this my chance to cut and wait? 3, 2.
Best sense says Trump administration
Or is that
regulatory
a
changes
breakout?
will unlock $2.5 trillion more in lending capacity from banks.
Fake out, breakout. Or are you the real thing? That was the chance right there. Still within the selling channel.
Best sense says private credit worry is its pro-cyclical in downturn.
And I still don't want to cut this position. I just want this thing to break out. Like, is it gonna happen? Sellers just stepping in. Buyers are holding well too, though. It's like right on the brink of it. If buyers can push this, we stop out a bunch of shorts up here.
Best sense says private investors in lending will always panic at the bottom.
Looking for a break of 540. Targeting 600 as the first TP zone.
Best sense says in downturn, the Fed and Treasury can push banks to ease.
It's getting tighter and tighter on this consolidation. So once it chooses direction, it's breaking out.
China's foreign ministry says China's foreign minister Wang Yi meets with French counterpart in Beijing.
Yikes. I want to just go make some coffee and just hope this plays out in the direction we want. It's just stressful to watch. It's a bad overnight trade, unfortunately. We were primed and ready. It was just news can do it to you. The unexpected can do it to you, at least temporarily.
At 10 a.m. Eastern Time, we have the US ISM Services PMI forecast 52, prior 52.4, with a range of 53.2 to 49.5. US ISM Services prices paid forecast 68, prior 70. US ISM Services employment prior 48.2, and US ISM Services new orders prior 56.2. Also expecting the US quarterly employment and wages Q2, and Trump is due to speak.
Man, sellers are pushing it down well. Buyers are holding decent too, but maybe I cut here and wait for the breakout.
So we have just learned that US quarterly employment and wages Q2 has been pushed back to
Either
December
way, I don't want to
19th,
be
so it will
shorting.
not be being released today.
Quick push, exit me out.
Besson says
Set
it's
some
100%
stop
fake to
orders.
say Trump's mental capacity is slowing down. Besson says private credit growth, a signed bank regulation, is too tight.
Yikes. There it goes. There it goes.
Order
Yep.
filled.
That's unfortunate, guys. Unfortunate. Very, very unfortunate overnight trade into this. Yep. Well, I think that's another reset. That's alright. We'll deal with it. It's another reset. Let's see here. Amor, yeah. Yeah, unfortunately it did. I had an overnight trade I was targeting. I literally took an overnight trade last night in a great average. Like up here. I missed my orders. Like I missed my orders by like 5 points. It was very unfortunate. And this morning, like I woke up a little bit late, and right when I woke up, right when I looked at my phone, within like 10 seconds, the market started dumping. So I woke up a little late, and yeah. Anyways, boohoo, sad story. So this swept to the downside, and now it's popping up. I needed to close that position.
ECB's Lagarde
That's
says the
exactly
third
what I was
option
doing
in
there.
EU proposal for Russian assets is
Unfortunately,
stretched, hopefully in
unfortunately
compliance
got
with international law
ripped
and financial
a little bit.
stability.
So let's see here.
And Besant says Trump accounts are beginning of a shareholder economy. In 5 minutes' time, we're expecting the US ISM
sweep.
Services PMI forecast 52 prior
Ah.
52 spot 4 with a range of 53 spot 2
Gonna watch
to
this thing
49
break
spot
out
5.
now too.
US
Still in the
ISM
selling
Services
channel
prices
though.
paid forecast 68 prior 70. US ISM Services employment prior 48 spot 2 and US ISM Services new orders prior
There it
56
goes.
spot 2. Also expecting comments from Trump.
All right. Well, if I'm gonna follow my rules, I gotta cut it. As embarrassing as that is. Sorry, guys. Just started the stream and I gotta cut the stream right away. My apologies, guys.
For more context with Trump's comments later, he's due to participate in the White House internship program class photo.
Man. But it's what I gotta do. It's what I gotta do. So today was an undisciplined day. Okay. Gotta calculate my ending balance. Dude, my computer's like not working right now. What the heck?
US airline stocks gain. Delta Airlines add 2 spots.
Stay up,
7%.
bro.
American
Yeah.
Airlines
Thanks,
down 1
brother.
spot 8%.
Let's see here. Okay, I need to. Man, I'll just guesstimate. Like, who the heck cares, I guess. I can't open up my calculator. My computer is glitching out for some reason. Let's see. Ending balance. 1400. $743. That's about right. Okay.
And Besen concludes Q&A at New York Times event.
Well, you know what we could do? We could do that fundamental analysis stream if you guys are down. Cause I'm kind of down for that. Little break here. As far as like anybody who's trading today, like I think that's like full longs. I unfortunately got swept out just now because I was like high leverage here. I think this probably breaks out to the upside because this only happened because of the Microsoft news. Like everything's still looking bullish. This is still a higher low forming. I guess if it breaks these lows, then maybe you can short it and you'd probably target 25,250. But overall, if it's going to be holding here, I think it's all longs for the rest of the day. This sweep just got me right here. Very, very unfortunate. Like literally this quick sweep here got me. And I finally decided to like cut. So I set my order to cut and it swept me after I finally decided to cut and wait for the breakout. But whatever, who cares? Okay. If you guys are down, we'll do the like I said, the fundamental analysis part of this thing.
10 seconds.
Okay, let me open this up real quick. $52.6 higher than forecast of 52
Prices paid 65
Watch
spot
this
4,
thing go.
65 spot 4,
Yeah.
lower than forecast of 68. New
There it
orders
goes.
52 spot
There it
9,
goes.
52 spot 9. Employment
Needs to get
48
above
spot 9,
540.
48
Above
spot 9.
540, it's above 540, you're targeting 25,700 basically. So if you are long, I got ripped.
The EU Commission adds Russia to money laundering risk list.
Okay. Let's do the fundamental analysis. It's gonna be super fun. My spreadsheet is like very, very outdated. Okay. Man, I'm so upset. Disappointed.
S&P 500 pairs losses slightly
Disappointed.
after November services PMI data.
I'm halfway like hoping that this dumps just so I could be like, okay, we would have gotten ripped anyways, you know. But I don't think that's gonna happen. All right, got my spreadsheet up, so go to screen. Let's go to our. How do I do this? Gotta kind of not go full screen. Mark it back there. There we go. Don't be a hater. Don't be a hater, be an appreciator. Oh. Oh. Oh no. Oh no. Oh no. Right up, like we would be like up real good right here.
We have put out the US ISM Services PMI
So
November
sad.
2025 report on the feed for those
Okay.
interested.
Let's get this stuff up. Yeah, that's what the market can do too. You know, if you over leverage, that's what the market can do too, right there.
Seeing some movement to
Because
the
right
upside
now
on
we're
the
getting the
S&P 500.
breakout, and yeah, it's just so annoying, guys. It's
That's
so
posted
annoying.
data from the ISM report.
Like I'm honestly annoyed by this. Because we had the trade idea. We knew that it was bullish. I woke up too late to react. You know, like the news, some random news ripped me pretty hard.
US
and
Treasury
like
yields briefly extend fall after
down
US
here, I was
service
like,
sector
dude,
data.
we're definitely
10-year yield
going
lands
long
down
still.
1.9 basis points
This
at
is still holding.
4.069%.
We're not below technicals, you know. We're not dumping below
The S&P
technical
500
levels.
turns positive, rises to a session
Leveraged
high.
up, and got swept out right here. Right here got swept out before the breakout. Yep. That's why leverage matters a lot, guys. That's why leverage matters a lot. Because even like a false move like this, it'll rip you, and even if you're right. So I was, yeah. I should have, whenever I identified this selling channel here, I needed to just pull the trigger right here, cut the position at break even / slight green. I needed to cut the position right there and just wait and get in at a worse entry, but get in on a guaranteed breakout, because this is exactly right here what can rip you, because the selling channel can continue making lower lows before it finally breaks out. And this one was manipulation candle or whatever those ICT traders say. right up here, we would have already negated all of the losses we
Lutnick
took
says
off the
tariffs aren't to
news
blame
candle.
for negative ADP numbers.
So, whatever. Okay, I'm not gonna dwell on it anymore. Okay, so what do we need to do?
So currently
We
Lutnick
need to
speaking
update
on
our
CNBC.
spreadsheet to know what we need to buy. Okay. So we'll start off with our top and work our way down. So first thing is Comcast.
Lutnick
Okay.
predicts GDP over 4% in 2026.
Let's see here. Investment calculator up.
Lutnick says prices don't move unless tariffs are above 15%.
Okay, so Comcast. I already know Comcast's financials. They look solid. What I just need to look at is the analyst estimates for EPS. So that makes it easier. I don't need to really think much of it through. So let's see
Lutnick
here.
says there's idiosyncrasies in October due to shutdown.
Okay, EPS 6.02. What? That's off. Sometimes my spreadsheet doesn't have the right calculations or the right numbers because I'm just using like the market data from Excel. So we don't always have the most accurate stuff. Oh, their trailing 12 months actually is $6. Interesting. How does that work? Why do they have... Wow, their net income just jumped. But their non-cash items went down by 7 billion. So what is going on here? CapEx. They're paying down debt. They're buying back stock. What do you think about Tradeify's new payout plan? Tradeify,
Lutnick says
I
Brussels
haven't been
very much
paying
wants a
attention
steel
to
deal with the
Tradeify,
US.
so I have no idea. I don't know what their new thing is. Okay. Why the heck is there... Why did their EPS jump so much?
Lutnick says European economies are attacking AI development with rules.
They acquire something.
Lutnick says EU's technology rules are costing them big time.
No. Okay, I have no idea why their EPS jumped so much.
Lutnick says
I
we're
have
going to
zero
win the
idea.
Supreme Court case on tariffs.
So I'm not gonna take that into account. So what I'm gonna do is I'm gonna go with these numbers, 422, just to be safe. Let's go 433. Let's go for 422.
Lutnick says we have other tools as well to regulate imports.
To 483. It's 4.6% growth. Add EPS growth here quite a bit higher because it's outdated. Market's still moving. Okay. Oh, actually, I only had a 5% growth rate. Okay, so I'm gonna do 4.22. And I really need my calculator. Here, one sec. Let me figure out how the heck to get my calculator opened because my
Lutnick says we will have
my
tariffs no matter
Windows
what
key
going
is not
forward.
working.
Lutnick says we're in the midst of discussions with Taiwan. Lutnick says our goal is to bring chip manufacturing to the US. Lutnick says a deal with Taiwan will bring more investments to the US.
I'm sitting here legitimately trying to open up a calculator. Oh my goodness. That is so annoying.
Lutnick says the US can reshore advanced manufacturing with robotics.
Let's see. Maybe I could open it up through run. The run menu. Oh, I can't even open up the run menu. Okay, whatever. I'm opening up a calculator through. Sorry, guys. I got ripped by the market today, and now I'm getting ripped by my computer. Okay, so I'm gonna use a 30% margin of safety for all these calculations. So I'm gonna do. Let me get my notepad. Okay. So I will be doing. So that's 4.603 times that by 0.7 So 3.2221. Okay. So we're still looking pretty dang undervalued even with this update. Okay. And that's with the margin of safety too, by the way. That's a 30% margin of safety. Okay. Now we are on to JD.com. JD.com. Check the market. It's still ripping up. Okay. So here's Comcast. I ran the number. With all DPS, with 30% margin of safety on the growth rate, we're still looking 86% potential return. So still very undervalued, and my numbers went down. Okay, so now we're going to JD.
Larnick says we have to train 5 million Americans for chips jobs.
We check financials just because we don't really want to buy any companies that are like financially kind of iffy. We want to buy like companies that are good financially, somewhat at least somewhat good. So, okay, what's the market doing? Double check. Okay, it's chilling. All right, back to this. So I could also pop up a couple other things here. Quick FS, JD.
Larnick says X-Lite is trying to augmentate chips manufacturing.
Check its numbers here, so good revenue growth, all that. Just for a quick review. And then we could look at if any super investors own it. So we got 4 institutional investors that own JD. Recent stuff, Q3, we had 1 person sell completely. Couple
Larnick on
reductions
X-Lite
and 1
says
addition.
extreme ultraviolet
Okay.
is the next level.
Okay, so that's what's going on there. Oh man, I'm gonna need some coffee here soon. Market still look like a breakout. Oops, wrong thing. Oh, we were seeing it delayed. Yeah, so it's continuing. I really hope, like, at least one of you guys caught this long, by the way. I really hope you did. And I hope you ride it all the way up to market open. All the way up here. Or not, sorry, not market open, but pre-market highs. Because, yeah, the next target is pretty much 25,700. So, I really hope you are riding it up if you did take the long. I would be riding this completely. I got wicked here. This line right here where I have my cursor, this was my max loss here. This line. So, wicked through by about 10 points and ripped up. Okay, back to JD. Alright, so financials. Okay, we're healthy there. Cash flows healthy and growing. Okay, let's go to forecast. We'll use handleless estimates to approximate what we need. Okay, let's see what our spreadsheet says. Whoops. Wrong thing. Okay, 3. EPS of 3. Okay.
In 10 minutes' time, at
What do we have
10:30
here?
a.m. Eastern Time, we have the EIA crude oil inventories
Okay,
Forecast a draw of
that's
2
pretty
million.
much it.
Prior, a build of
2.7.
2.774 million.
Okay,
With a
so I'm
range
gonna
of
go
a build
3
of
to
3.095 million
5.58.
to a draw of 3.233
3
million.
to 5.58.
Lutnick on Fannie and Freddie
That's a
says IPO is sooner rather than later.
22.9% growth rate. Oh, wow.
Furthermore, at 10 a.m. Eastern,
22.9%.
Eastern
Okay,
time, we
this
have
is about to
gasoline
be super
inventories,
undervalued.
a forecast, a build of 1
22.981
million, prior a draw, a build of 2.513 million,
times
distillate inventories,
0.7,
forecast, a
taking
build
that
of
30% margin of
0.934 million,
safety.
prior
That
a
is
build of 1.147 million, and Cushing inventories, prior a draw of
Wow.
0.068
That is
million.
16.0867. So it looks like JD is now even more undervalued based on our numbers that we ran. It's one that we picked up somewhat recently. A lot of Chinese stocks are going to have a lot of people risk off from Chinese stocks just because there's, I guess, a little bit of added risk, but financially speaking, they look pretty dang good. Okay, let's pop over to Elevance Health. Okay.
So a reminder of the API figures from yesterday. Gasoline stock change, a build of 3.1 million. Distillate stock change, a build of 2.88 million. Cushing's, a draw of 0.89 million. And crude oil, a build of 2.48 million.
Okay, financials on
US Commerce
Elevance,
Secretary
I'm pretty
Lutnick
sure
ends his
looked
remarks
good.
on CNBC.
A bit of a...
Fannie Mae shares rise
trailing 12-month
3.2%.
net income
Freddie
looks
Mac up
really good. Wow.
1.9%.
Oh, they must have had some kind of acquisition. Let's see here. Balance sheet looks good. Cash flow. Okay, that's good. So they had a $3.7 billion acquisition recently. $5 billion acquisition 2024. Man, if their net income is popping up just because of this small acquisition, that's nuts. Okay, cash flow's a little bit jumpy all over the place.
Digitizing assets will reduce financial system
It's not
friction.
terrible.
PayPal shares turn negative, falls 1.1% to a session low.
Forgot net debt positive means. That would remain, okay, yeah. With liquid assets. So, I mean, their debt levels are fine. Yeah, okay. Elevance Health looks good. So let's go analyst estimates. Forecasts. We'll run off those numbers. Okay. 30 here. Let's check what our spreadsheet says. Elements Health 24.45. $24.45, is that accurate? Yeah, it's trailing 12 months. Okay. Let's go off trailing 12 months
In 5
and
minutes
we'll
time, we
put
have
that
the EIA
$41
crude oil
estimate.
inventories, forecast a draw of 2 million, Prior, a build of
So it's
2.744 million, with a range of
24.45.
a build of 3.095 million to a draw of 3.233 million.
Coming up to
Gasoline inventories
$41 a
forecast a
share
build
after
of 1
3
million.
years.
Prior, a build of 2.513
That
million.
is
Distillate inventories forecast a
18.8%
build
growth.
of 0.934 million. Prior, a build of
18,
1.147 million.
oops,
Cushing inventories prior, a draw of 0.068 million.
18.805 times that by 0.7. Our margin of safety, that is 13.1635. 13.1635. So Elevance looking still undervalued. Okay. As I like listen to those market buys, I'm just getting more and more upset. Alright, next is Disney. Disney. Okay. Financials wise, Disney. Whoa, they had a huge jump. What the heck? Wait. Oh, no, not a huge jump. Never mind. Oh, that's probably why the jump was there. I had it on quarterly, not annual. Never mind. I'm tripping, guys. I'm tripping. Y'all are watching this nerd go through. I don't even know if I'm a nerd. Just going through financials here. Alright, so they had a little tiny jump in revenue. Their net income jumped like crazy. Wow, their margins finally stabilized. Oh man, I should have held my Disney position a bit longer. Wow. Their margins actually stabilized. That is crazy. Wow. Okay. That was like my whole reasoning for buying Disney earlier on. Okay, that looks fine. Cash flow. Wow, cash flow is growing nicely. Man, I might have sold my Disney position a bit too early. You know, what's the price at? It's 105 a share. Actually, never mind. I sold it. I think I sold it for 120 a share. Never mind. I think I made it out well. No, I think wait. Yeah, I'm pretty sure I sold it at $120 a share. I think I sold it at the top here. Actually, I made it out pretty good. Disney looks fundamentally better. And when it was looking worse, I straight up like flipped it for at a good level. I bought it like in the $80 per share area, sold it at like 120. Hey, not bad. Okay. So let's see what Disney looks like then. With estimates. Estimates look really good for growth, okay. So on here we got 685. So we're going 685 to 959. 685.
1 minute remaining. I'll be leading
to
with EIA crude oil
959.
inventories.
That's 11.869 annual. 11.869 per year times 0.7. 8.3. 8.3083. I had 12% in here before because the EPS was lower and I was pricing in basically margin improvement or margin recovery, and it recovered like super fast. But either way, with the 30% margin of safety, Disney looks like it's 30%.
10 seconds.
So that's still looking undervalued. Okay, let's go to PayPal. PayPal.
Still
Okay.
waiting on the data.
I think I need some coffee, guys. I'm gonna take a second here. I'll pop the
Cushing, a draw
charts
of
up
0
here.
spot 457 million.
Back
A
up
draw
here.
of 0 spot 457 million.
Wow, we're still in fear on the fair and greed index. Interesting. All right, I'm gonna take a quick second. I'm gonna go grab myself a quick coffee. We'll continue. Pop in the chat if you don't want me to do the updating of the spreadsheet on stream. Just let me know. If you're fine with
So
it,
it looks like
I guess you
there's
could let
some
me know
issues
as
with the
well.
updating
Just
on
so
the
I know
EIA's
at
website for the
least
report.
somebody's fine with
They haven't put out the latest
fine with
report yet for the
watching me
EIA.
update the spreadsheet. But yeah, while the market's open, I think I'm just gonna like update the spreadsheet today. Just do that little by little because my spreadsheet's outdated, and we gotta keep the 100K challenge rolling. So if we're gonna be trying to invest like institutions, we at least need to have some kind of spreadsheet to give us an idea of where we should be putting our money on
And
the
it looks
daily.
like their site has crashed.
Let's go,
Says
loving it.
services
Okay,
unavailable.
awesome. Into oil. If you're the only one that says that, then I'll continue just for you. Okay, I'm gonna go make myself some quick coffee. I'll be right back. We'll continue.
So the site is back up for the EIA, and hopefully they'll release the figures soon.
Microsoft shares pair decline to 1.4%. According to CNBC, Microsoft has not lowered its sales quotas for salespeople. CNBC cites emailed statement from Microsoft on sales quotas.
Oh man, am I salty. Oh man, am I salty. Guys, I told you. I told you. You see that? I told you. Man, oh man. Man, oh man. And I got stopped out on this wick. Man, oh man. Man. Guys, this is how rough the market can be sometimes. Like I'm legitimately telling you, right at this moment, I would be up. I would be up like a lot on the day. But something like so insignificant like this right here, this wicked me by 10 points. By 10
Nvidia
points.
shares gained 0.5% after erasing
And then
earlier
proceeds to
1.3%
move
decline.
150 points to the upside. Like, do you see how crazy this is? Do you see how crazy this is? And yeah, like Trading Penny said, Microsoft has not
The euro
lowered
pound
sales
fall more
quotas for
since
salespeople.
August 7th, down 0.5%.
So we first had that bad news about Microsoft, where it was some source called The Information posted Microsoft lowers AI software sales quotas. And then guess what? A couple hours passes, and then Microsoft has not lowered sales quotas for salespeople. So I don't know if that's them being like, hey, it's fake news or whatever. But either way, like the market's been bullish, you know, like some kind of news drop that's not like really that
NASDAQ
significant.
100.
It's not gonna just make the market dump. You know what I mean?
The NASDAQ 100 briefly
But
erases decline.
like this is the kind of stuff like today was definitely an undisciplined day for me, unfortunately. Like I was saying, I'm aiming for 100% discipline, and then like, you know, something switches in the brain, and you're like, actually, no, we're smarter than that. The market's totally bullish. You know, like it's just weird. Like you get caught in this cycle. And like I'm sure you guys know exactly what I mean by it. But yeah. This is why you have to size. Like I'm trying to explain this in a way where like you guys at least get something from my mistakes. Because I want you guys to be more successful than I am. Like, with appropriate sizing, I would be green right now. But because I had inappropriate sizing, I took additional risk, which, with limited drawdown, causes me to get causes me to get liquidated. And then it's, you know, the trade plays out. But because of trade sizing, it didn't play out. You know? This is why it's important to size correctly. It's better to go about things where it's just like a long-term grind. And like, here's the thing. The only appropriate time it would be to size up is when you've passed your eval account, you've passed your buffer for the funded, you've already taken payouts on the funded, where you're like, okay, this is good income, but I want to actually start raising the income. That is the only time you should think about raising the stakes. That is the only time. Anytime before then, there's no reason to. There's no reason. I know that I look like a hypocrite because I still did it, but there's absolutely no reason to do it. You know why? Because you're just increasing your chance of liquidation. That is all.
Futures reached $5 for the first time.
Yes, you're possibly maybe gonna make more money, possibly, but the thing is, mathematically speaking, you're raising your chance of getting liquidated. Like you can see that right here. Because of my raised risk, I got liquidated. If I had sized even 10% less, I would have not been liquidated and we'd be like massively up on the day. So sizing matters a lot. But like either way, I shouldn't have. I should have been sized like 25%, or I think I should have been sized 30% of what I was at. So I was 3x what my sizing should have been. So I was a little bit tilted. Anyways, like I was saying, the only time you should ever raise your risk is once you've already passed, you already are on the funded, you already took payouts. The time to risk more or increase your risk is when you're like, okay, I've had my fun, I've already got this steady income on the funded, I need more. That's where you raise. Except for before you raise, if you're using Take Profit Trader, you need to create your own buffer that is higher than what they require. That's what you have to do. Because mathematically speaking, if you're going to raise risk, you're going to have to raise your amount of drawdown that you're able to take on. So like, if your risk on a 150K account, like my risk on the funded is going to be 2 micros. That'll make it basically where it's like mathematically almost impossible to blow the account. I always still blow the accounts because we're freaking dumb sometimes. But either way, it's 2 micros, right? And that's just what I decided for $4,500 drawdown. If at some point in the future I decide, hey, I wanna risk more, make more, whatever, you raise to 3 micros. Except for instead of having $4,500 of drawdown, guess what? You got to raise that by 50%, because you're raising your. If I would be going from 2 to 3 micros, that's a 50% increase. So now instead of having a $4,500 buffer, I got to increase that by 50%. So that would mean I would need to have $6,750 of drawdown available. What do I have to do for that? Well, I need to go $2,250 higher than my buffer level, and I have to not withdraw that money, and I have to use that money, which I could withdraw, but I need to use that money as my drawdown, as my risk, as my buffer, as my safety cushion.
AMD CEO.
That's just technically what you have to do.
Commodities like memory have become
like there are people in this market that are trading like 30 minis at a time. But guess what? The ones that are smart that are trading that size, they have millions and millions of dollars of drawdown available. They're not like us in the prop firm accounts with $2,000 of drawdown or $4,500 of drawdown or $1,000 of drawdown. No, they're not in that situation. I'm talking about the ones that are smart and consistent and successful. The people with that size, even like 5 minis, people with that size, they got hundreds of thousands of dollars of drawdown available. So anyways, I'm getting off my whatever it's called, soapbox or whatever. And we're back to analysis, sorta. Not really analysis, we're not going that deep. This is more of just like quick look through, see if the company is like about to get liquidated. And if it's not, then you know, it's good enough to invest in. We just got to run the numbers to make sure that it's not completely terrible. Okay. And if you are longing the market right now, by the way, oh, how did that happen? Well, I guess this popped up. It is breaking. It is looking like it's breaking 600.
Might be a minor perturbance.
So this little dotted line right here, that's previous close. So this is its next resistance. You are long? Okay. Well, good luck. But basically, right now, this 600 level, watch it carefully. I think overall like 700 would be the target, but watch 600 carefully here. That's previous close. It's a psychological level. It needs to get above and stay above. If it gets above, stays above, I think easily you can target 700. Easily. That's if it gets above, stays above, though. There's a possibility of consolidation and chop for a while in this level. Or in this area. If you get easily scared out, like you're gonna get chopped up. Okay. So, we're on PayPal, right? PayPal, let's go to financial statements, annual. Okay, revenue's growing nicely. And net income growing nicely. I haven't been looking at shares outstanding. I need to actually take a look at that. Okay, yeah, I need to pay attention to that. The other stocks I was looking at, they were all, I'm pretty sure, buyback shares. Okay, revenue, RSC. Okay, PayPal is just like solid. Let's take a look at our super investors. Okay, quite a bit of them. Recent activity, some reduced, some added. Okay, nothing special. We did have 2 big sellers in Q2. So Pat Dorsey, Lee Inslee, 2 big sellers. But then we had Punch Card Management. I don't know what that is. Actually, buy-in. So either way, we got a decent amount of big buyers. We're sitting at pretty much 5-year lows. So it's like, is it gonna dump or not? Financials wise, the company looks fine. Let's see. Balance sheet, they're looking good on that. Look really good. Cash flow, they're looking really good. So it's cash flowing. Let's see here. I'm gonna have to respond to an email here soon. Okay. Investing activities. I forgot what they bought back here. 2018, 2020, 2021. It was, they bought a couple different businesses. I forgot which ones they were. One of these is Zelle, or yeah, I think it's Zelle. or whatever that payment thing is, not Cash App, but the other one. Is it a good idea to be long? You're talking about in the market right now? I'll just, I think it is, yeah. As long as you have a good average. I hope you went long like under 500. But yeah, I was like I would still be long right now if it was me, or if it were me. My average was 25,470 approximately, 25,490, something like that. Like I would be sitting long here, but like I was saying, like watch 25,600. Like it's a level where you are gonna see probably some consolidation, a little bit of pullback, you know what, all that stuff. If you get
Poor
antsy, like
CEO
it's,
says he's to
you know,
meet
you
with
might
Trump
as well
and
take
Duffy
profit
today.
and then wait and see if you get antsy. But if you don't get antsy, like I'll be long. Yeah, thank you, Lynette. And everything I'm saying is completely not aimed toward any individual. It's just
Microsoft
my
shares pair
opinion on
losses, last
what I
down
would be doing
1.7%.
hypothetically while looking, you know, if I'm looking at the charts. Okay. So, okay, cash flows, all that's looking good for PayPal. Everything looks totally fine. Okay. Estimates are looking good as well so far. Okay, we got 499 right here. So that pretty much falls in line, 499. Okay, we're going to 748. So 499 to 748. Right? Oh. So that is a 14% growth rate annually. So 14.446 times 0.7, taking off that 30% margin of safety. Okay, that's actually going to be a bit higher than what I had here. So 10.1122. So there we go. PayPal is looking undervalued. Okay. Okay, I think I'm going to remove, or I'll make like a fill. Okay, I'm gonna make this to like green. Show that I did them. Okay, on to United Health. United Health. Pasha, you still haven't invested the $10-ish we got the target dividend, correct? Yeah, I haven't invested that yet. And I haven't done the $10 for the day yet. So as of right now, Eric, I'm actually going through the spreadsheet and I'm updating all of the numbers, and this is going to give me a better idea of what we need to be putting money in. So I'm going to try to do that like as much as possible today. Okay, United Health, let's go to financials. Okay, really good revenue growth. Net income got hit recently. Looks like that's not a typical thing. Market's pulling back a little bit off that 600 level. Like I said, if you get antsy, that 600 level is the spot you either want to take or
EIA says
just
technical
watch
issues
closely.
delays.
It needs to get above that 600 level, stay above,
EIA says
and
the
then
technical issue
it's
delays weekly
definitely
petroleum data.
you're targeting 700. Okay. All right, so that looks good. Balance sheet. Okay. I mean, okay on debt, I guess. It's okay. MH. Yeah, 2024 looks like they slowed down just a little bit. And a big dividend. Okay.
EIA says they are investigating the issue, delaying the weekly US oil report.
Okay, they're buying back shares. Okay. Cash flow. Pretty good cash flow. Just trailing 12 months in 2024. Kind of hit a little bit. Just a little bit. Okay, let's go to estimates. Okay, what do we have on our spreadsheet? We have
Russell 2000 index up
1917
1%.
EPS. 1917. Okay. A little bit higher. Alright, so we're going 1917. 1917 up to 2679 over 3 years. That's 11.8. 11.802% times 0.7. 11.802 times 0.7. Okay, that's 8. Okay, so a bit lower than that. So it's 8.2614. Okay, so United Health is a little bit closer to fair value. So 16%. Okay. Well, how's the stock price been moving recently? Because I pretty much bought the dip on United Health. Pretty much bought the dip. Okay. Maybe I should have sold up in the 380s, 370s. Up in here, maybe I should have sold. We'll see. Maybe I offload United Health closer to 400.
Johnson's office.
But the thing is, if they stabilize, they're
So
going to
reminder
like right
scheduled at
back
2
up
p.m.
here.
Eastern Time. Nvidia Huang is
Yeah,
meant
I think
to
that
meet
one's just a
BOP
hold.
Bank Committee.
I got a really good average on there. Which, speaking of, here, let me log into my Robinhood real quick. Let's see here. That sounds looking okay. Let me log into my Robinhood real quick. So I can like pop onto that every so often. Okay, there we go. Robinhood. Okay. So United Health, here it is. Which, speaking of, it's nice and up to date. Average cost $279. $279. So I basically bought the dip. My average is like right here. So if so we're up 20% right now. And if it goes up to these highs, that'll be up about 30-something%. So, yeah. Anyways, I think it's a decent buy either way. Yeah. Yeah. We already cut the Google position by half. Right at the basically tippy top. Comcast back up. I bought that that call option on Comcast right before earnings, and then it dumped at earnings. So funny. So on this option, we're down to almost 60%, $165. But it's a $27.50 call option. So right now it's almost at break even, like just option wise. It expires January 16th, so we have a month and a half. Comcast basically just needs to run up a little bit over the past week. Did kind of find a little bit of support, but overall it's been trending down heavily. So we'll see if a tech dump happens early in the year, like first couple weeks of January. I think we're gonna be looking pretty good for Comcast. I think that's one of those that gets rotated into. All right. Anyways, let's get back to United Health. So United Health, let's go to forecast. Did I already do this? Yes, I did. Okay. So we're done with United Health. Basically, United Health is our first one that's close to fair value. Just slightly undervalued. But remember, I'm adding a 30% margin of safety every single time I'm doing this. So technically, with margin of safety, like, this is still technically undervalued, but I'm putting a 30% margin of safety just flat out on everything, so that I'm, like, you know, adjusting for any potential risk involved, whatever it is. Technically, you know, if a stock is considered like higher risk or whatever, technically you want to go like super nerd and adjust your margin of safety. You want to make it higher for your riskier stocks and whatnot, but like, I'm not that big of a nerd. Come on, guys. I'm just doing a flat 30%er on everything. Okay, on to General Mills. General Mills, okay. General Mills, I have been seeing it has been downtrending. This is actually looking like potentially a really good buying opportunity for General Mills. But I'm not going to speak too early about that. So who knows? It could be that General Mills just is gonna go bankrupt at some point. Who knows? Looking at it as of right now, financials look good. Okay, they're at their all-time highs for revenue and net income. Okay, actually, net income only. Okay, let's see, balance sheet. Okay, not as pretty. So they are a little bit high in debt. Okay, cash flows. Very stable cash flows. Okay, very stable. Very, very stable cash flows. Okay. Market's coming back up to test 25,600, by the way. So if you're on that, pay attention. Pay attention to that 600 level. If it breaks, the next stop is 700, most likely. Man, oh man, am I sad? Am I still sad? Still sad and salty. Okay. Okay, General Mills, what am I doing here? GIS. Okay, pretty flat revenue. Pretty flat. I mean, maybe that makes sense. You know, a lot of people are more on the healthy side now. You know, watching what they're eating, less cereals and whatnot. I forgot exactly all the stuff that General Mills owns. But it's like pretty sure on the little bit more unhealthy side, at least for people that are more health conscious. So they have kind of flatlined on their revenue just a little bit. General Mills has strong support around 45. It's firmly on your radar. Okay. Have them been buying back shares? A little bit mixed actually. Over the years. So 2018 through 2020, they actually issued shares. They bought right back, and they're currently buying back shares. So that's good because that boosts earnings per share, boosts stock valuation or stock price. And since they're buying at these prices, that's good too. They're not wasting their money. Okay, let's go to forecasts. Analysts obviously liking them. Yeah, as far as EPS goes, I think this is inaccurate for analyst estimates. Basically, analysts are thinking flat earnings per share slash a fall and then a recovery. I don't think that's the case. But maybe we run with that, I guess. I mean, just the trailing 12 months is already 50% higher. This is like one of those where I'm like, I don't want to go with analyst estimates. Okay, let's see what super investors are in it. Okay, we got one super investor with like nothing at all. I mean, fundamentally speaking, like it's not crazy, like it's not that pretty of a company. Well, growth-wise, it's not that pretty of a company, but fundamentals actually aren't bad. Net margin of 15%, gross margin 34%. Look at this. Look at this right here. Revenue per employee, 590K for a food company. It's kind of cool. I don't know if you guys have ever looked at this stuff. Some of these tech companies, their revenue per employee is so nuts.
A build of 0.57
I don't really
million,
like
a build
pay
of
attention to that
0.57
much.
million compared to the expected draw of 2 million.
Let's see.
Gasoline inventories, a build of 4.518 million, a build of 4.518 million compared to the expected build of 1 million.
Dividend.
EIA distillate inventories, a build of 2.059 million, a build of 2.059 million compared to the expected build of 0.934 million.
It seems decent. It seems decent to me. We could look at alpha spread just for funsies. Okay, GIS. I never really use this site, but I got it here just as a like way of seeing whether I'm like even ballpark with my numbers. This site kind of has like a nice layout of stuff. It is a paid site though. could also go Guru Focus. For that, I need Incognito. GIS, Guru. Guru Focus.
Treasury's Livorno said we are already starting to see capex cycle turn up.
So, with this one as well, we're getting
Treasury's Livorno says full expensing rules for
We're
factories
getting,
expected by the year end.
intrinsic value about $67.
Dollar yen falls
Guru
at
Focus.
0.5%.
Free cash flow 58. Median price to sales 70. Discounted cash flow 43. Free cash flow and
We have put out
earnings
the EIA
both
weekly
around
inventories report on the
$45.
feed for those interested.
See, this is a little bit of the issue here, I think. This is where the risk is. That debt. It's that debt. Okay, so they got, just to see what their what the heck, they have pet food? Okay, pet, dough, baking mixes,
Treasury's
yogurt,
Livorno says Trump
other
policies focused
segments,
on more supply side stimulus than Biden's.
snacks, cereal, convenient meals. So that's their stuff. Most of their sales US. I don't know. Maybe I actually don't like it that much. Because I think like people are more health conscious. And like the more and more people that are getting that way, like that's probably why there are not very many super investors in here. If they pivot and like start going more health conscious, which I feel like they have been somewhat, maybe it turns around. But yeah, let's calculate this with analyst estimates. So let's go just with analyst estimates. Let's go 365 to 424. So I'm gonna manually do this 365 to 424. Okay, that's 5.1% annual growth. 121 times 0.7. That is higher than what we had. Okay, 3.5847. Okay, so based on these numbers, it is literally at fair value. Okay. Jonathan, sorry for reading this late, by the way.
Taiwan's Lai
Hey, I was
says
able to
China
make
drills
a
becoming
trading bot
increasingly
that I
intense.
back tested for a full year on NASDAQ. It has 115% ROI, win ratio of
So Lai
of
speaking in a
45%,
pre-recorded
max
Q&A
drawdown
video
of
to the New York
24%
Times
overall.
event.
Took me 3 hours to program one yesterday. I'm running it now on my demo account. Nice, Jonathan. Heck yeah. Yeah, Jonathan, test it out. See if it
British pound jumps 1%
if it works
against
well.
the dollar, up the most since May.
Like that's the way to trade. Like I said, like the biggest thing that makes us fail is emotions. If you have a trading bot, like
Treasury's Livorno says
trading like a
50-year
robot
mortgage proposal
is almost
officially off the
is
table.
almost always better than trading with emotions. So like if you have whatever rules and whatnot that you have, if you have to put it to a bot with zero emotion, it should be easy money. Japanese housewives made a bunch of cabbage today.
Treasury's Livorno says monetary policy has been too tight.
Okay, So, what are we thinking for General Mills? So, like I said, General Mills, it is at fair value. Okay, so just because of the risk of that one, I'm not gonna jump over stuff for it. It seems I think it seems better than what I'm having this calculated at. It seems like a lot better value. But I'm gonna leave it like this. It's not one that I'm like dying to buy. So honestly, like there are a bunch of other opportunities in the market. So like risking money on this one specifically might not be worth it. Maybe if I had like a dividend only portfolio or something like that, maybe General Mills would be like an okay one to add to it for
Treasury's Livorno says
diversification.
the
But
$2,000
other than
rebate
that,
of tariffs
yeah,
would require
probably not
congressional
needed.
approval.
Okay, let's
and
jump over to
uncertainty of its
Meta.
status.
Meta is one I'm a little bit excited about checking. So let's check it. Meta.
Treasury's Livorno says we may not need it if Treasury's Livorno says we may not need it if the growth backdrop is as strong as I
Look
think
at all
it will
these
be.
super investors that own Meta. Crazy.
Lai says US
So
Taiwan cooperation has expanded under Trump.
recently, Q3, we had a bunch of reductions. Then we had a handful of additions. Before that, we had a bunch of reductions, bunch of reductions, bunch of reductions. So a lot of the super investors were taking profit at the tippy top, at the tops in here.
Avidius Huang
A
says
little
the
bit in
Capitol
here
Hill
too.
visit was to answer questions about AI.
Okay. Okay. So ROIC wise, I mean, Meta's just insane. It's really good. It's really good. It's just one of those, man. It's a great company. Maybe not morally, maybe not, whatever, but financials wise, it is insanely good. Did they actually start paying dividends? I did not know that. Okay, let's go to financials.
Global AI and humane partner to
Annual.
accelerate sovereign
Look at
AI
how
with
crazy
large-scale
this revenue growth
NVIDIA-powered
has
AI
been. It's
centers.
insane. Okay, net income growth insane as well. My golly. EPS crazy growth. Okay,
Treasury's
shares
Livorno says it appears we
outstanding.
move close to 4% GDP growth in Q3.
Since 2017, they've been buying back shares, which I don't love. They were issuing shares back in from 2012 to 2017. They were issuing shares when they were like dirt cheap, and then they were buying back
We have put
shares.
out a
When
video for US Treasury's Livorno speaking
Anyways,
on the feed for
balance
those
sheet.
interested.
Okay, super good. They're pretty much zero debt, by the way. Pretty much zero debt. Yeah. They took on a little bit of debt in 2019. But they were like absolutely zero debt back here. But they got a bunch of cash.
Treasury's Livorno says we don't see
78
tariffs as
billion in
being
cash.
inflationary. Inflation is rooted
At the
in
end of
services.
2024, they'll probably have higher now.
And Treasury's Livorno says seeing tariffs absorbed in the margins.
Okay, either way, they're good on that. Okay,
Taiwan's
cash
Lai
flow.
says Taiwan
cash flow looking
Semiconductor
good.
is a global asset.
Let's see here. Okay, there.
Lai says we
Oh,
remain
wow, their
supportive as
capex
Trump
went
seeks
up a
Taiwan
lot, though.
investment.
Wow, their capex almost doubled. Huh.
Livorno says we are expecting on de minimis inflation effects from tariffs next year.
Purchase of investments. $51 billion. Some kind of investment. Interesting. All right, let's go to forecast. I mean, overall they look good. Meta looks really good. Okay, let's see what our spreadsheet says. 2907. Yeah, we'll go with that number. 2907 to 3636. 2907 to 3636. That's actually not that high of growth. So 7.744% with our 30% margin of safety. That is not that high at all.
Lai says, I won't comment on if the US should let China buy advanced chips.
So that is 5.4208%. Oof. Oof, oof, oof. There it is, folks. I was thinking Meta's looking pretty undervalued, but based on these numbers, actually not.
Lai says Taiwan decided to buy its top manufacturing to go to China.
So it's actually 30% over. So I'm getting a fair value of $450 a share. See, the thing is, analysts could be wrong about these numbers, but they could be wrong about them. They could be downplaying it a bit, but like I'm just going with the analyst projections and putting a margin of safety on them, because like honestly, analyst estimates are almost always like pretty.
Lavorna says AI is complementary to existing workforce.
What's the word? Analyst estimates basically are a bit more rosy than reality
says
sometimes.
We still need skilled trade
/ most
AI.
of the time. So like that's why I'm just going with analyst estimates, applying a margin of safety. But here with Meta, it could be possible analysts are downplaying a little bit on earnings. But either way, like I said, there are a bunch of opportunities all throughout the market. Like I don't have to care about owning Meta, owning, you know, whatever stocks. Like I could just bite the ones that are like super obvious screaming buys. Like JD, we're seeing a fair value of $98 per share, and it's currently below $30 a share. So it's like, we're looking at different things like this. So just like, maybe.
Lavon says we need the Fed to help, but
maybe we should actually buy stuff that's like super obviously undervalued, instead of the ones where it's like, maybe analysts are wrong here. Maybe they outperform. Maybe this, maybe that. Maybe we go with something that's less risky. Okay. Next one is Target.
And Q&A pre-recorded video to the New York Times event.
How's the market looking?
Lavon says Trump is
still
keeping
struggling
us in suspense on
to get above that 600 level. So a little bit of consolidation, but I do like that it's holding above this key level so far. So 540 is a key level here. 540 needs to hold. So 600 is more of like a psychological level / that's previous close, I believe. Around 600. So if it stays above 540, which is a key level, it just needs to break above that previous close. I think we're looking good either way. Yeah, rip. Okay. So we're on to Target. KTGT. Good ROIC. Good revenue growth, basically going with inflation. Their revenue has stagnated the past 4 years, but that's pretty much all retail, pretty sure. Can you make it so we see the numbers on the side? For what, the market? On the charts? Okay. Sure thing. For trading view, I won't be able to do that. Or I guess I could. But it's gonna look messy. Are you talking about like you talking about like this? It just looks messy. Which one do you want? I'm fine with either one. Yes, but the one in the background. Wait, so do you want this one right here with a lot of stuff in the background, or do you want this one? Okay, so you want the cleaner one, okay? This one, but you just want the numbers? Okay, I think I can do that. Let's see here. How's that? Okay. Got it. Okay, there we go. Got it up for you. All right. So let's get target. So target, like I said, stagnated a little bit the past couple of years, but that is basically all retail. Couple super investors in it. We had one sell off Q2, one sold off Q3 of 24. Okay, so not much action there. Okay, let's take a look at financials. Financials. Okay. Net income down a little bit. Margins got hit a little bit. EPS isn't hit as much because, well, I guess it is a little bit. Yeah, never mind. But they have been buying back shares little by little. This is probably a perfect time for them to be buying back shares too. So they're at a very good price, I think. It's probably what they're doing. All right. As far as debt, they're a little bit on the higher side. They got a little bit of cash. Liabilities. And a lot of this is leases, by the way. Okay, so that looks fine. Okay, let's go to analyst estimates. All right, what do we have on our spreadsheet? So we have 824 for EPS. 824, okay. $8.24. Okay, I guess we can use that number. Okay, so we're going to 824 to 867. Okay, that's about 1.7% annual growth. 1.71 times 0.7. It's about 1.197. So quite a bit lower. So 1.197. I think this will honestly be higher, but I'm just going with what I got. That's what I got. So technically with these numbers, this is above intrinsic value currently. Okie dokie. Let's go over to Paycom now. Paycom is one that I haven't been touching for quite a while. Paycom, I was able to make a decent trade on Paycom. I think it was about a 40% swing trade, somewhere around there. It took me like 3 months. But as far as I know, I think Paycom came back down in price, so it might be a decent opportunity. Got 8.04, okay. Paycom. Okay, Paycom looks actually pretty decent. Also, by the way, looks like we're breaking above 600. Needs to break above, stay above. So far, looking good on the market. just watching this grind up is just ticking me off. All right. Okay, revenue's been good. Net income's been good. EPS been very good. They've been buying back their shares. Slowly but surely. Balance sheet. Okay, good on debt. Okay. Okay, it looked decent. Cash flow. Cash flow is good. Steady growth. Wow. Yeah, Paycom. I remember like the last time I checked out Paycom, like they looked good. Their numbers looked really good. Really good steady growth. I may actually, depending on what we see here, may need to open a position back up with for Paycom. Okay, so in the spreadsheet we got 8.04. 8.04, huh? What is the trailing 12 months? 8.04, okay. So that is accurate. Okay, 8.04. Okay, and the estimate is 1116. Okay, so 8.04 to 1116. That is 11.55% growth. 11.55 times 0.7. Okay, so we're a little bit lower actually here. So we're at 8.085 growth rate. Okay, we're pretty much at intrinsic value, so never mind. I guess if we pop down to like $120 a share, that would probably be a strong buy. As of right now, yeah, we're pretty much fair value on it. That's with my margin of safety. Just want to remind y'all again. The whole point of margin of safety is to, you know, account for unknowns a little bit. So like as of right now, it looks like it came down to a really nice support level for Paycom, but gotta trust my numbers on this one. This one's solid though, either way. This company, the numbers are solid, all that. But yeah, we just need to come down a little bit more for us to buy it. I guess also like if we do find like super quality companies, like very quality companies, kind of like an example would be like AutoZone. We could buy at fair value. So we don't really have to wait for those companies to come down to like extremely undervalued levels. Like we can buy at fair value for companies like that because it's just like there's such high quality companies where it's just like we're fine at buying at fair value instead of waiting for discount. So there's that. Okay, so for that we got that, like I said, pretty much fair value. Let's head over to Adobe. Oops. I need to go there. Okay. UDBE. Really good numbers on Adobe. Yeah, Adobe also looks like it might be pretty undervalued potentially. UDBE. Okay. Here's Adobe. Look at this. 700K revenue per employee, 181K net income per employee. Once you start getting to the tech side, it starts getting crazy. Things like Apple and Nvidia, they're going to be in the millions per employee. Okay, look at this margin, 30% net margin, 88% gross margin. Really, really good for, you know, things like Adobe. Okay, these numbers are looking very good. Let's go to
Official and
financials.
automakers say the White House is to announce sharp reductions in fuel economy requirements.
Guess this market's awaiting Trump talking. Yeah, I guess so.
So that's scheduled for the 2:30 p.m. announcement that Trump is going to make.
Oh wait, Trump's supposed to make an announcement like right now, right? He's just like 10 minutes late. As always. All right. See how long this takes? We're literally only through how many? We're through 10 stocks. And like, this list is huge. And this is like just a list of stocks that I've been like, okay, I kind of want to keep track of these, you know? How are you, Pasha, aka Squid? Not the greatest. We blew the evals this morning, unfortunately. I got wicked out. Like literally right here. This came down 10 points below. This came 10 points below where my max loss was. And yeah, it was unfortunate. It's because I had an overnight trade. I was targeting like 25,690 something, I think. And then I just like, we had three or four touch points in here overnight that just did not fill my order. And then this morning I woke up and like I just watched this dump like 20 seconds after opening the chart. It was like the most perfect timing. You can't make it up. Like I literally open up my phone. I woke up a little late too. I woke up like 30 minutes later than I usually want to. I want to wake up basically like 8:30 Eastern, but I woke up at 9 o'clock Eastern, and then I opened up, and then 20 seconds later it just like just starts dropping. I like ran downstairs, turned on my computer and everything. I'm like, oh no. So I was like in pretty heavy drawdown down here. I think I got stopped out like somewhere in here. But I went long pretty heavy on this bounce, and then I got liquidated on this sweep right here. So it's just a little unfortunate. If I would have been able to survive this sweep, we'd be up like heavily up here on the day. But yeah, that's how it's been. You just need a bot, bro. I know. Down today and yesterday. Your two losing days in 40 days. Hey, that's not bad at all. Yeah, just don't let it get to your head and you're good. Okay. Back to Adobe. All right, so revenue growth, good, stable. Revenue growth, net income, same thing. EPS, same thing, which means they've been buying back shares. They've been buying back quite a decent amount, actually. Okay, balance sheet looks good. Balance sheet looks good. How much cash they got? Oh, they're really good, yeah. All right, cash flow is looking really good. Okay, Adobe overall looking very, very good. Adobe looking very good. All right, let's take a look at estimates. Estimates are looking crazy. All right, what was our EPS? I keep opening this up. Okay, I'm closing that. That's annoying. All right, 1605. What we got on the spreadsheet? Okay, 1605. is it like that? I hate that it's different. 1605. So trailing 12 months. What's with all these companies having such high trailing 12 months EPS? Okay. 1605, huh? And the estimates are crazy high too. Okay. I'm not going with. Okay, I'm gonna use these numbers here, and I'm gonna use that growth rate because the CPS does not line up at all. Okay, so we're going 2082 to 2660. 2082 to 2660. 8.5%. Okay. 8.509 times 0.7. 5.95%. Wait, why are the estimates so weird? Okay, let's just try it. 5.9563. So it's a little bit. What the heck is with these estimates? I'm so confused. Why did EPS just jump like that? What do we trust? Okay, ADBE, Guru Focus. Incognito. Yeah. Basically, Guru Focus saying that this is like deep value. DCF. You know what? Yeah, I might need to go with analyst estimates because free cash flow might actually be a lot higher. Stock-based compensation kind of high. ROIC is really good though. Buying back shares right now, which is good. Oh wow, only 53% of sales in the US. That's actually nice. They're pretty diversified. Check. Okay. Okay, let's check. Let's double check this real quick. Let's double check it.
At 12 p.m. Eastern Time, we're expecting comments from Bank of England's Man, who's speaking on a panel at the GIC College of Central
cash
Bankers
flow.
Symposium about reserve currencies. There is a Q&A. No text is expected.
Let's go to key ratios here.
There is no live video as well for Bank of England's man's comments.
Okay, so EPS 12, but free cash flow 17.5. So free cash flow is like 50% higher. And that's how it's been since 2021. Actually, it's been going on for a while. The cash flow's good. So cash flow trailing 12 months 9.6 billion. Net income 6.96. So net income, there's that. Non-cash items. Their non-cash items go up. I wonder what that could be. I'm too lazy to go into their 10K and read all about that. But it looks like it's consistent over the years. It's 9 cash items, and it keeps growing. So it's been very consistent. Very consistent all the way since 2005. Non-cash items keeps growing, consistent inflow of cash. So I think we could trust that. So that adds like 30% almost there. And then changes in working capital. I mean that doesn't really matter. And then the depreciation gets added in. Yeah, depreciation plus that those non-cash items. That accounts for that almost 50% boost. Okay, I think we need to go premium on it. That's like the downside to how I calculate some of these is that when you have companies that are strong free cash flow, which by the way, I'm pretty sure Paycom's strong free cash flow. Like I gotta go premium. Which maybe what rules should I set? Okay, I'm gonna do 0 margin of safety. If the free cash flow is at least 30% higher than net income, I think that's gonna be the rule. So I'm gonna jump right back to Paycom real quick. So Adobe showing up as fair value as of right now. Showing up as fair value, yep. So I'm gonna jump right back to Paycom, like I said. just verify if Paycom is. I think Paycom actually is higher. Let's see.
In 5 minutes' time, we're expecting comments from
So we had that.
Bank of England's man.
Paycom statements. So, net income, where is it? So 450, 500, 340. 450. 450, 500, 340. Okay, never mind. Free cash flow is not higher on it, so never mind. We're good on Paycom. It's just Adobe's one of our first ones that's like that. There might be another one in the list up here that is kind of like Adobe, where free cash flow is a lot higher. Maybe Meta is. We should probably check ones that really matter. It's annoying going back and checking. Okay, 58.5, 62.39. Okay, Meta's not that. Which other one should we check? Maybe Target. .7, 4.1, 4.1. Okay, Target's not. What other ones could be? I think the last two I'll check is General Mills and United Health. Those are the last two that I really care about. UNH. $17.5, 14.4, 22. Okay, this one is just a little bit, kinda, sorta. Not really. It's more of a fluke. Let's just double check UNH actually. It looks like there may be some of that going on. Key ratios per share. Let's see. Free cash flow and EPS. Free cash flow and EPS, okay. About 30% higher here. About 20% higher. 15%, 15%, or 10%. 15. Okay, UNH isn't high enough really, but it is definitely consistent. It's definitely consistent. So
Bank of England's
for
man.
UNH, I think I raise it just slightly. So this was that. I think we'll raise it to just 9.0. Let's go 9.2. Raise it by 15%. There we go. Okay, and then last one, GIS. Real quick, check that. GIS. Key ratios. It's just a quicker way to check. Okay, these ones are pretty much in line. Okay, perfect. Now we can continue our list. So just verified those. All right, next up, Pfizer. PFE. I think I should just check it like right away. Things like that. So this one's pretty much flat. Revenue and all of that. Free cash flow and EPS. Kind of mixed. So it has a little bit more years where it's higher, but it's not crazy consistent. Okay. Let's go to financials. Look at that dividend yield, almost 7% on Pfizer. Okay, revenue growth. We had the spike here during COVID, which we can kind of ignore. Overall, revenue has been growing. So before the anomaly was in the 50s, 40s. So we're now in the 60s. So we're growing. Net income, same thing. Not looking at the anomalies. Net income down just slightly. Okay, and interesting. They started diluting shares just slightly. So they're not buying back. Okay, balance sheet. A little bit higher debt. Let's see their cash. Cash, okay, they got 20 billion, that's good. They also got 40 billion short term. Yeah, debt not looking the absolute greatest. Free cash flow pretty flat.
US natural gas futures climb over
Okay, let's see
$5 per million
forecast.
British thermal units for the first time since December 2022 on record
Forecast
flows
flat.
to LNG export
Interesting.
plants and forecast for colder weather and high demand over the next 2 weeks.
Okay, so our spreadsheet, $1.72. By the way, I have this highlighted red here because I was like, this was you guys can't see it here. I have Pfizer highlighted red here because it's one of those where I was like, I bought it, and it was one of those that I had marked as like I want to get rid of it. Same thing with CVS down here. CVS, I'm currently holding CVS. I probably need to cut it, but we'll get to it eventually where I run the numbers and we'll see if it's worth cutting or not. But CVS, we actually have a position in. Let me show you real quick. So on Robinhood, look at that. The market's down 0.13%, but we're up 0.7% on the portfolio. Not bad. So where's CVS? CVS, look at this. We're up 46%. 46% up on CVS. Average cost of $52. Okay. Could have sold off in the 80s. Yeah, when we run the numbers, we'll figure out whether or not I should cut this. Right now, price to earnings is out of whack because they I don't know, something happened. I was hoping to maybe cut this closer to 100, but it may not be possible. We'll see. All right. Anyways, back to Pfizer. So our trailing 12 months for some reason is off. So statements, annual. Okay. It's weird. Showing 172. For some reason, forecast is this. Okay. I think I'll stick with the 172 and we'll put 265. So 172 to 265. Because the free cash flow is like a little bit higher the past 2 years. So I think that's fine. So that's a growth rate of 15.497. Take our 30% margin of safety. And we input this. Yeah, growth rate of 10.8479. Okay. Showing up as potentially undervalued. But I have this highlighted red because it has some debt issues. So it's like I only want to buy this if it's like extreme undervaluation. Okay. Next is Amazon. Amazon definitely numbers have changed quite a bit. Okay. Finally, the ROIC is going up. Good revenue growth. Okay, let's see free cash flow if it's higher. Yeah, most of the time it is. Recently it hasn't. It hasn't been. Okay. Amazon just for funsies. Look who's invested in it. We got a bunch of them. Alta Rock Partners, it's 30% of their portfolio. Yep. Okay. Big holdings. So like right now, like I definitely don't want to be buying Amazon, but a big reason why I run these numbers is to at least get a price that I would want to buy out, you know. At least get a fair value on it. So let's go to financials for Amazon. Crazy revenue growth, continuing to grow its revenue like insanely. Net income, they're finally hitting net income because they've stopped writing everything off, everything under the sun. They're actually starting to book profits now that they've hyper scaled up already. Basic EPS here, which has skyrocketed. Shares outstanding, they've been diluting shareholders consistently every single year since 2005, and they've even done it the past couple years. So I guess not surprising if we look and it's going to be super overvalued. It's probably smart of them. Okay, debt. As far as debt goes, they got $104 billion in cash. Current liabilities 180. Big accounts payable. Okay. I mean, debt-wise, it's not too bad. They had a little bit of spike in debt 2022, 2023, but they're coming back down. And let's see their quarterly. They raised a little bit, but they're probably gonna do all right. You know, debt. They're gonna have the cash flow to pay it. Okay, trailing 12-month free cash flow really bad. Okay, and why is that? It looks like it's because it's a huge investment that happened. Wait, it's not even an investment. Wow. Wow, CapEx is huge. No way. Wow. $120 billion in capital expenditures for their fixed assets. So I'm guessing this is their warehouses being built. I'm guessing that's what it is. So 2024, 83 billion. The trailing 12 months is 120 billion. Let's check out quarterly.
No.
So yeah, quarterly, just a lot. So they were pretty like, since 2021, about 15 billion it looks like per quarter. And then recently they had a big boom. Toward the end of 2024, they had a huge boom. They pretty much doubled their capex. And more recently, more than doubled from what their average was looking like. So I'm guessing this is warehouse supply chain type stuff. improvements. Okay. There's that. Net income. Dang, they got so much depreciation booked. Wow. Okay. Anyways, that's enough for looking at that. We just all we gotta do is do the math. We can be nerding out about their numbers another day. Okay. Analyst estimates expect huge growth, which is not surprising because they've been using, accounting magic to write off as much as possible. And they're finally going to start booking some profits. Okay, so we got 708 on the spreadsheet. Is that anywhere close? Okay, that's close. Close enough. So 708 to 1214. 708 to 1214. That is a growth rate of 19.691%. We take our 30% margin of safety. So that comes out to a growth rate of 13.7837. Okay. So we are pretty much almost at fair value for Amazon. It looks like our fair value for Amazon is just over $200 a share. So a good way to kind of look at this, by the way, if you get to like fair value, your growth rate is a good way of like looking at what your potential return over the next 7 to 10 years will be if you're buying at fair value. If you're looking at like these slower growing companies that are like at, deep undervaluation or whatever, you're kind of buying at the discount, but you're not buying for the like actual growth. You're buying for the discount. So like you're basically hoping that you get the price adjusted at least within the next couple of years so you can book your profits and you don't really have to hold it, for 5-10 years, whatever it is, because your growth is going to probably be pretty low once it gets to fair value. So something like General Mills right here, we calculated a growth rate of 3.58%. So if that's accurate over the next 7 to 10 years, like it's already at fair value. So like it won't be surprising if the stock grows like 3 to 5% per year for the next 5 to 10 years. So since it's not crazy undervalued, like there's no real reason for us to jump in it. Okay, you can do more complicated calculations. So like if you're a finance nerd, you can do like discounted cash flow and all of that. You can set your discount rate at certain levels, so you can kind of figure out what rate of return you can get or you want to get based on whatever numbers you put. But like my whole thing is like keep it as simple as possible. Like overall in the market, if you're in the market, you're going to make money. If you run simple calculations to find undervalued stocks, like you're going to probably beat the market. As far as like going super in-depth nerd status, you're gonna like break your brain doing it, and maybe you'll beat whatever return you would have doing simple calculations. So it's like I feel like it's not really worth it that much. Unless you're like a quantitative analyst or whatever they are, then it's worth it. But, most of us are not trading with billions of dollars, so there's no need. Okay. Next is SMCI. This was an interesting one. This one was one I was like very excited about. And I completely missed it at the bottom because the last time I ran this, for SMCI, it was showing has like 200% potential return. So the last time I ran the numbers here, I think it was at like $20 a share. something like that. Yeah, I think it was at, yeah, it was down here. It was at like $20 a share. And I ran these numbers and it was like 200% return or something. I was like, oh my, I should probably buy this. But then I was like, I'm going to wait just a little bit because it seems like there's a bunch of bad news and whatnot. I didn't buy it. And yeah, it pretty much tripled in price from the bottom to the top here. So it would have been a good one. But you know, that happens sometimes. Okay, SMCI there. Let's check SMCI. They were having like a little bit of accounting type weird stuff. They're kind of messing with their numbers a little bit. So like the very first time I researched this company, I noticed that their accounting was off. Like their reporting was like a little fishy. It was like, I think they were reporting like 1 cent earnings per share like multiple times in a row or something. I was like, this isn't like a coincidence. Like they're definitely trying to do something to show positive earnings. And like they did have a little bit of drama with that. They were kind of cooking the books a little bit, or not cooking them, but they were doing like bad accounting. But like since then, I think they've recovered. They were able to, you know, get their stuff back in check. So it might be fine now. Okay, EPS compared to free cash flow. Okay. Overall pretty mixed. Recently, it's higher free cash flow. Okay, either way, really good growth. Oh wait, that's Amazon. Whoops. SMCI. Get back there. Okay. I mean, still good growth. Okay, let's look at financials. Okay, good. Net income, just a little drop here. APS, same thing. Shares outstanding. Okay, they've been diluting as well a bit. They are more of a growth stock, so it makes sense that they're diluting. But yet they've been diluting for a long time. Ever since 2006. I don't really love that. I don't love that they're diluting at these prices as well. It's not very smart. It's not the greatest. Okay, balance sheet. Okay, they're looking really good on the balance sheet. $5 billion in cash, really nice. Current liabilities, half of that. So really good. So they probably will not just go bankrupt overnight. Free cash flow, all over the place.
According to the Wall Street Journal, Stefanik, in an interview with the Wall Street Journal, says that Johnson is losing control of House Republicans. So Trump ally Ellis Stefanik attacks House Speaker Johnson's leadership.
Okay. Yeah, I remember like the last time I looked at their financials, it was weird. Either way, who cares? Let's go to forecast. Okay, forecast. Okay, what do we have in our spreadsheet? We have 124. All right. I think I'm going to go with this number because free cash flow is a little bit higher here. I'll go with this number and then analyst estimated number. So that, and then going to 321. Okay, 321. And we are going from 124. Okay, that's 37.3%.
So we have put out the article on feed for you to read through.
7.308. Take our margin of safety. That's 26.
Further from the article then,
26.1156%.
criticized House Speaker Johnson, calling him
So
an
we
ineffective
got
leader who's losing
this
control
showing
over
as a
the
fair
geopolitical
value of
confidence headed into
$60
the
a
midterm
share.
elections, saying that he certainly wouldn't have the votes to be Speaker if there's a roll call vote tomorrow.
So $60 a
And
share
I believe the
fair
majority of
value.
Republicans would
So that
vote for his
means
leadership.
whenever this
It's
popped up
that
here,
widespread. So the comments came Tuesday
like these
night as
pop-ups
Stefanik
here,
was
those are
publicly
basically
sparring
fair
with
value.
Johnson over
The tops of
legislation
these
provision she wanted
wicks.
included in the annual defense policy bill.
So maybe
Wednesday morning, Stefanik
potential
said that she had a
opportunity here for
productive discussion with
SMCI.
Johnson and Trump, and
Now that it's
provision
pulled
would be
back a
added
bit.
to the bill.
Okay. Then as far as the market's going, not a bad pop-up. It's getting back above 600, 25,600. Looks like it wants to keep moving. Hopefully whoever was long is still long and didn't get shook up here. Hopefully it didn't get shook up. Alright, so we got SMCI next. Chipotle, oh my goodness. I mean, it's probably gonna be a waste of time on that one. Let's do it just because it's on here. CMG. I feel like I should just take this off the chart. Okay, CMG. Honestly, if this is not like incredible, I'm just gonna remove it. You own CMG? I mean, it had already good growth. I'm just talking about for like making it a new purchase. It has downtrended a bit though, so I guess maybe potential opportunity fell almost 50%. Maybe there's some value there actually. Okay, so good growth, good revenue growth, all this stuff is
Senior-
looking all good.
Which government does not
Okay.
consider its concerns on use of frozen
Free cash
Russian
flow and
assets were
EPS
addressed
are
by
looking
EU
in
Commission.
line, so very nice,
Belgium
beautiful.
cannot accept being asked
Very
to bear
much
the risks
on the
of
dot the
such
past
operation
2
alone.
years. That is nice. That is nice to see. Okay, go to financials. Take a look at that. All this looking pretty dang good. Actually, very clean, very good looking. EPS looking good. Shares outstanding. So they started buying back just a little bit of shares, and I guess they've been buying back slowly since 2005. Yeah, never mind. Yeah, they've been buying back slowly, so that's good. And hopefully they increase their buybacks a little bit since we pulled back a little bit. Pardon my French. Is it worth to keep? Well, now that it's fallen 50%, probably isn't worth selling. I mean, we'll run the numbers right now. I can't give you personalized financial advice because that would be illegal. But let's just run the numbers and see here. Okay, debt-wise, they're 1.4 billion cash. Okay, they got a little bit of debt. All of this looks pretty good. Okay, let's look at forecasts. Forecasted good growth, which, yeah, I wouldn't be surprised. Okay, so we're showing 114 here. 114, okay, that falls in line. So we're going to 171. So 114 to 171. That is an annual growth rate of 14.471%. We apply our 30% margin of safety. That is 10.1297%. Okay. So with that, I'm showing a fair value of $26.3 a share. That is with the 30% margin of safety. If we remove, so just sell calls until the cows come home. Here, I'll show you without the margin of safety what our fair value is. So as of right now, it's currently at fair value without the margin of safety. That's what I'm seeing. So no margin of safety. We are at fair value on CMG, which isn't too bad because the growth is good. The projected growth is good. But yeah, as far as like, is it a stock that I want to be in for crazy stock growth? Probably not. Me myself, but it seems like a pretty low risk stock to be in. It seems that way. They got decent financials and all that. Okay. Eli Lilly next. So got more healthcare. LLY. Nice steady growth here. PE is out of whack. LLY, let's see if we got any super investors. Got a couple. Just a couple. Alright, return on equity is crazy high. Okay, let's go to financials. Okay. Good revenue growth. Good net income growth. They had a big jump in net income. Interesting. Just recently had a really big jump. EPS basically doubled. Okay. Shares outstanding. Okay, they've been buying back a decent amount. They've been buying back a pretty good amount. They stagnated the past couple of years though. Maybe that's because they feel that it is a little bit overvalued. Possible. As far as debt goes, not great. Okay, so financials speaking wise, not the best, absolute best. Okay, what did they have happen here? Did they have an acquisition? Okay, their capex rose. Their capex over doubled. Their capex like tripled, almost quadrupled, actually quadrupled even since 2023. So capex went up a lot. Okay. Add some kind of acquisition. 2019. Couple in here. Why did they have a jump? They just randomly got more net income. Okay, I don't really understand what happened with them, but I guess what the heck are analysts thinking here? I don't get. Okay, there's some kind of story here that I don't know what's going on with Eli Lilly. So I don't really track like all these different stocks. Like I don't listen into all their earnings calls and whatnot, so I have no idea what they're doing. But apparently Eli Lilly's gonna have a crazy jump in revenue and income. Let's look at Guru Focus. So I mean they jumped in price, so it must have been something. Okay. mean, they're a little bit undervalued based on Guru Focus, but the numbers that we really see here, Peter Lynch value, DCF, projected ECF, our tangible book, all that stuff, we're pretty dang overvalued off those. Really nice margins though. Gross margin of 83%, net margin of 31%. Okay. What does this look like? What the heck? Free cash flow the past 2 years is so much lower than EPS. Yeah, I don't like this. I don't like this, Eli Lilly. That's weird. They paid dividends too. Their valuation's been like out of whack for multiple years. Yeah, I don't understand this one. Okay, let's plug and play our numbers, I guess. Okay, so we're showing 20.45 somehow. Okay, 20.45, let's just go with that number, and we're going to 45.53. 20.45 to 45.53 somehow. That's crazy. Okay, that's a 30% growth rate. Okay, so we got 30.577. We apply our 30% margin of safety. That's 21. Okay, 21.4039%. Okay, so we're still not at fair value. We're overvalued. Even with those crazy growth numbers that I don't understand at all. I guess if we if we take off our margin of safety just for the fun of it, then yeah, we're like barely undervalued with zero margin of safety. But I do not want to jump in without margin of safety. I want to have safe entries. Okay, on to NVIDIA. Yeah, Lily was weird. Those weird stuff. Let's see what the super investors have done with this. Wow, we had a huge addition. Okay, Viking Global sold off completely. Poland Capital Management just like completely ran up its position. But we don't have really much big holders. I guess there are there are a handful of holders with 5 or more % of their portfolio in it. Like no really huge believers in it. But man, these margins are definitely gonna get squeezed. 70% gross margin, 53% net margin. It's like it's gonna get squeezed. Look at this. Look at these numbers. What I was talking about. Revenue per employee, $3.62 million. Net income per employee, $2.02 million. Can you imagine? Like the amount of revenue each employee brings in, like they could technically afford and still like make massive amounts of money. They could afford to pay every single one of their employees over $1 million as a salary, and they'll still make massive amounts. They'll still have a like net income of like probably 1.2 million per employee. So they're crazy profitable. It's nuts. But can you imagine? Can you imagine a company that's so profitable that they could literally afford paying over $1 million per to every single person that works there? It'd still be like one of the most profitable companies out there. That's nearly as good as Steam's revenue per employee. Yeah, I actually haven't seen Steam's because they're a private company. I don't even know if if they've publicized that information. But yeah, Steam's probably super profitable. Their business model is like crazy low. Low effort. Called capitalism, Karl Marx theory. Okay, so Nvidia, the best company out there. All right, crazy good, everything. Let's just take a look what their free cash is looking like.
According to CNN, Hexeth
Oh,
endangered
EPS, free
troops by
cash
using
flow.
Signal and Watchdog finds.
Pretty close. Okay, somebody endangers somebody's life using Signal again. Of course. All right, statements. Okay. Good, just skyrocketed revenue and income. Shares outstanding. Well, they kind of started diluting, I guess, in 2016, just a little bit. I'm surprised they didn't
CNN
dilute.
citing four sources
I'm
on
surprised they
Watchdog
didn't
report
dilute
of
here
Hexeth
in
Signal
the
use.
past couple years. Like, why not? You know, they didn't dilute at all. For some reason, they bought back here some. Okay. They were diluting when they were like dirt cheap, and then started buying back a little bit. Now it makes no sense. All right. I mean, numbers wise, they're gonna look incredible. $43 billion of cash. Like, not, yeah, they're good. Cash flow. Okay. They bought something. They bought something in here. Some stuff. I don't know what they're buying, but they're acquiring some stuff here. So hopefully they're buying out competition. Okay, CapEx raised a little bit, but it really doesn't matter that much compared to their cash flow. Very small amount of CapEx. Like guys, this company is very ripe for getting its margins squeezed. It just they can't be a money printer forever. Like other players are gonna get into the game, but they're milking it while they can. While they have this advantage, they're definitely milking it, which is smart. But it's not there forever. That's why I'm like, I want to be careful with an investment like this, because it can easily change overnight. Okay, but we got analyst estimates, so it looks like they're projecting, you know, a push up to 2027, and then up here they finally hit some competition, and 2028 just stagnates, I guess. All right, so what do you have on the spreadsheet? 404. Okay, that's close enough. We'll go with that. So 404 to 945. So 1, 2, 3. Yeah. 404 to 945. Okay, that is 32.745% growth, putting our 30% margin of safety. That is 22.9215%. So, as of right now, Nvidia is pretty much at fair value with our margin of safety. Now, let's just say no margin of safety, which I think would be dumb for Nvidia. to go no margin of safety because, like I said, they are ripe for margin squeezing. I think that margin of safety is super important for something like Nvidia because, yeah, like once competition comes in, they're going to squeeze their margins. They're going to have to make stuff cheaper. That's going to, lower their net income and all that stuff. And, yeah. But without a margin of safety, Nvidia is undervalued by $60. So if you technically are buying at this price, you're buying with a potential return of 33.5% if it goes straight back to fair value. But putting in our 30% margin of safety, we're at fair value. So not bad. Maybe if it pops down to like $150 a share, maybe 140, 120, I'd probably nibble on Nvidia. Okay, let's pop over to FedEx. And NASDAQ's still holding pretty well. Still holding pretty well. Not bad. Momentum slowed down just a little bit, so I don't know. I'll definitely like if you've been long in here since somewhere in this box. Okay, I'm gonna just draw this real quick. Let's go drawing. Shapes, rectangle. If you went long at some point in this box, like you probably wanted to have some profit taken, some partials, hopefully. If you went long not in this box, oh, good luck to you. Good luck to you. You entered late. You entered very late. You had a lot of opportunities to enter. You made some bad entries. In this box, good job. Hopefully you're still holding long. And you didn't get shook out, like I said. But this box, perfect entry. My entry was literally over here. Over here somewhere. And my dum-dum got knocked out. Okay. Okay. Well, I guess I could keep that box there just in case. Could put it like this. I guess if it does tap back in there, to show where potentially is a good entry point. All right. Let's bounce back to what we were doing, which is FedEx. FedEx is our next one. FDX. Okay. Okay, FedEx. Decent slow growth. Okay. Check our ratios. PS free cash flow. That doesn't look that good. Also, right here, free cash flow is just constantly lower than EPS. Not good. I don't like that. Okay, FTX. Got some super investors in it. Those margins don't look pretty though. 21% gross margin, 4.6% net margin. So any type of issues, not good. Look at this. Revenue per employee, 293K. Net income per employee, 13.6K. FedEx. Okay. You know what? I think based on that, I'd just delete that. I delete it off here. Wipe it from the face of the earth. Yeah, I don't even want to check FedEx. Those numbers are just not good enough. Those are not good enough. Okay, let's jump over to Bank of America now. BAC. Okay. Got a good amount of super investors in it. Okay. There we go. Net margin 15%. See, that's better. Okay. So when you're looking at banks and like insurance companies, they have different like different data points that they report and like different stuff that you're supposed to look at. So I'm not an expert on banks and insurance companies, but I just overall look to see whether or not it's stable on the numbers. That's really all I do. So stable / growing, like return on equity here grew a little bit compared to like 2015, 2017. So just little things like that I'm looking at. Okay, that looks decent. Okay. Yeah, good book value too. All right. Let's go financials here. Like I said, you gotta know what you're looking at here, and I'm not 100% the best at banks and insurance companies, but it's fine. Okay, there's definitely dilution for the GFC, but since then, with the economy stabilizing, once everything flatlined, Bank of America did start buying back shares. So they were buying back consistently since like 2017. So that's good. Balance sheet. Okay. I mean, it looks decent. Okay, cash flow, free cash flow, looks fine. Okay, let's put a number on it. just like one of those things, you kind of just have to take a look, see if any red flags kind of stick out. It looked fine. I mean, it's Bank of America. It's a huge bank. Okay, what number do we have? We have 366. And like I said, like with investing, honestly, I just look at it as buying money printers. So like whether it's a bank, whether it's manufacturing company, whatever it is, tech company, like I'm looking at them all kind of the same as they're just money printers. The only thing is like whenever you look at their financials to see whether or not they're like higher risk, lower risk, whatever, like with banks, you just have to look at them a little bit different. As they report different stuff. Okay, so we got 366. Okay, that aligns pretty much the same. Okay, 366 to 581. Okay, that's average annual growth of 16.654%. Apply our 30% margin of safety. That gets us. Wow, okay. Not bad. 11.6578% annual. Wow, okay, Bank of America's still technically undervalued. Wow. Wow, okay. Wish I had these numbers before because I actually did buy Bank of America, but I sold it early. I sold it, I think, at like 40 something a share. Dang. I got fair value of about $90 a share. I actually bought it like back here, like the 20s. Yeah. The only thing I'm like a little bit worried about for banks is any type of liquidity or credit crunch. That would be the only real worry. But banks have been performing pretty well. And this is almost to its pre-GFC high. It's almost to it. It hasn't broken it yet. Alright. Well, anyways, that was Bank of America. What's next? Alibaba. Okay, let's do that. Okay, Alibaba. Okay, very nice numbers. Ratios. Okay, free cash flow usually higher than net income. Slash in line. This previous year it's a little lower. Okay. And let's see who has it. Okay, decent amount of super investors actually have it. As far as margins go, 40% gross, 12.4% net. So not bad for the type of business they got. Okay, let's take a look at financials. I think this is transferred into USD on trading view here. Okay, shares outstanding. They've overall been sort of buying back shares. I guess kind of mixed from 2011. Past couple years though, since 2020, been buying back shares, which is good. They bought back quite a bit actually. Okay, balance sheet. Balance sheet looks good. Looks very good actually. Wow, 63 billion in cash. Okay. Wait, what was their market cap? They got like 1/4, 1/5 of their market cap in cash. 1/6. Okay, either way, their balance sheet looks really good. Okay. Okay. Free cash flow looks Looks okay. It's not as clean as it was looking before. But that makes sense. You know, they had a crazy run up for COVID and everything. Overall, I mean, what are we looking at? Overall, we're looking good. Other than 2024, which we need to see what the heck happened here. Trailing 12 months. We don't have this calculated. Okay. Okay, let's see. Net income depreciation, okay. Investing. What are these investments they're purchasing, huh? Purchase of investments. Okay, they're buying some kind of investments. They also bought some kind of business. They acquired a business here. Acquired another one here. A bunch of businesses in here. And they're buying back a bunch of shares. Just more recently, it's just like I'm not liking this as much. Just the most recent. This was all looking clean,
Fitch
and
rating
then they
says
got
booming,
this now looking the best.
booming IT investment cushions you a slowdown, and world GDP forecast edges up.
But that's the purchase of investments. Whatever investments those are. Okay, let's go to forecast. Alright, so a little bit of a dip and then popping right back up. Alright, so we have 735 on here. Okay, that works. 735. So that aligns pretty much with this. We'll go 735 to 1172. Okay, that's 16.8% growth. 16.828. 30% margin of safety. That gives us 11.7796. So Alibaba. I was actually just like looking at this like, okay, what, like maybe I should start taking profit here soon. No. So we're still below fair value on this one with our margin of safety. So I think maybe closer to 200 I start taking profit with Alibaba. That's one that we're up a decent amount on. Like, let's see here. Here's Alibaba. It's our smallest holding. We're up 34% on it. Average cost of 117. So, and by the way, Alibaba, I started buying it like back here, and then I think I took profits.
We have posted out the article on the
I
feed.
took profits,
Again,
like
Fitch
somewhere.
rating says
Maybe
booming
let's
IT
see real quick.
investment cushions you a slowdown, and world GDP forecast
And I
edges up.
recently bought some more. See, this is when I was buying. Where did I sell? So I sold at
Further detail from this.
$120 a share. Then I started buying back once it started pulling back.
Tariffs on the U.S. economy.
We
have raised our world growth.
I sold at
forecast in our
140
December
here.
global economic outlook, but still expect growth to slow.
Here I
to
was buying in the
2.5% this
80s,
year,
108.
2.4%
Here I was buying in the
from 2.9% in
70s.
2024.
Here I was buying in the 60s, even some cases. Yeah, so I was buying like rock bottom for a while. Was buying rock bottom, took profits up in the pumps, and then started buying back in on the pullbacks. So actually not too bad. I was basically just riding the wave with Alibaba. So was buying all throughout here. I was literally buying the absolute bottom on some of these. Yeah, I was buying the absolute bottom, then selling on the pumps, buying back in on the drops, selling on the pumps, buying back in on the drops. And then I think I might have sold on the pump. I don't remember. Looks like this topped out at 188. I don't remember actually if I did or not, but I added in on this drop here. I added 30 bucks more. So either way, I think Alibaba, maybe I only look
Fitch
for
Ratings cuts
for
short
selling
and medium-term oil price
at
assumptions
least
and
some
adjusts gas prices.
at like 200 a share, possibly. That portfolio's pushing up a little bit. All right. So we're looking decent for Alibaba. Okay. Next, booking. BKNG. KNG. Hopefully you guys aren't falling asleep over there. Had to kind of divert since I got ripped today. PKNG.
We have posted out the article on feed for you to read through. Again, Fitch Ratings cuts short and medium-term oil price assumptions and adjusts gas prices. So their new base case for Brent is at $69 for 2025 compared to $70 a barrel. For WTI, they're looking at $64 a barrel
Okay, we
compared
got
to
some.
$65 a barrel.
Oh my goodness. Look at this.
2026
Gross
they're looking
margin
at
of
Brent
97%.
$63
Net margin of
compared to
19%.
$65.
Okay.
WTI at $58 compared to
Interesting.
$60 for their expectations for 2026.
Okay. And then as far
That's
wow.
in their base case. In their stress case,
Wow,
though,
recently
they
they
see
had a
Brent
big
at
push.
Brent at $45 compared to $35,
Whoa.
and WTI at $42 compared to
Big jump in
$32 for
profitability.
2026
Really
in
big
their
jump.
stress case.
They had like a huge dump because of COVID, yet they still remained profitable. They had massive growth coming in. Then COVID hit, they got dumped on, but they still remained profitable. And then they've since then recovered and continued the growth. Whoa. Wow. All right. Key ratios, let's just take a look. EPS, free cash flow. Okay, free cash flow significantly higher than EPS. So that means we could remove margin of safety for this one. Okay, we'll go to let's check financials real quick. Statements. I'm sure these financials are going to be rock
Seeing
solid.
here, according to Microsoft
Okay.
analyst, they say reported lower quotas.
Shares
in their
outstanding.
point.
Wow, they've been buying
This
back
is
a
a
bunch of
commentary
their
from
shares.
Jeffries.
That definitely has caused their EPS to skyrocket as well. They've been buying back a lot of shares. Wow. They bought back like
Jeffries wrote that the
50.
information of the article that was released in the morning at 9 a.m.
They bought back
Eastern
like
Time, they said that
50% of
he
their shares
completely missed the
almost.
point in his
Like
article,
over
and,
30% over the
spoke
past
to
10
company's
years.
management.
That's crazy.
They say that
Okay, balance sheet.
Microsoft emphasized looking at the scoreboard. RPO growth accelerated 14 points to 51% year on year last
16
quarter,
bill
or
cash.
148% year on year, including the $250 billion OpenAI deal,
Okay.
persistent capacity constraints as AI demand, supply, and commentary.
Cash flow. Okay, yeah, everything looks really good.
And our checks
Market
strongly
cap
supportive
160.
robust Copilot adoption.
All right, let's go to forecast.
To summarize, they basically said the article just completely missed the point.
Wow. Look at that. And then if these guys do a stock split, I mean, it's probably gonna keep going. Okay, so what do we have on here? We have 153 EPS. Okay. 153. Okay, that's close enough. Okay, we'll go 153 to 364. 153 to 364. That's oh my goodness. That's 33.497% per year. I was about to put our margin of safety, but because free cash flow is so crazy, I'm removing margin of safety. 33.497. Wow. This is almost like too good to be true. We got a fair value of $9,360 a share, and it's currently a 5K a share. What does that look like with our margin of safety? 23.4479. With margin of safety, we're still looking at 35% potential return. Wow. Okay. This is definitely one that I need to be paying attention to then. 33.497. Remove the margin of safety on that one because free cash flow is just so much higher. You guys saw that, right, though? 97% gross margin. That's insane. Let's see. For some reason on QuickFS, it's showing gross margin of 100%.
I said earlier on. Cut says 2025 to 2027 oil price assumptions reflecting market.
And their net
oversupply.
margin has just been increasing since COVID. It actually looks like it hasn't fully stabilized compared to how it was in 2018, 2019. Wow. Very interesting.
Seeing Salesforce and AWS deepened collaboration.
Yeah, that looks good.
Agent
That
Force
looks good.
360 for AWS.
Okay, I was
faster
actually
and
surprised by this
safer
one. This
AI
was
success
not
for
on my
enterprises.
radar at all. This was not on my radar at all. This one's an interesting one. I mean, that one's going to be possibly cyclical too because it's travel.
So Salesforce says that Agent Force 360 for AWS
It's travel,
will
right?
be available
Pretty
in
sure it is.
AWS Marketplace in early 2026.
Software, what does it say? Hotels and entertainment services. Yeah, pretty sure that's the booking.com or whatever. Those numbers are insane. I'm surprised by that. All right, next one. T Rowe price. T Rowe price. T Rowe. So this one's like an investment company, so it would make sense that you don't have a bunch of people really in it. They're managers themselves. Good numbers overall. Let's take a look at ratios and this stuff. So EPS, free cash flow. EPS is higher than free cash flow. I don't love it. Okay, let's go financials. Market cap 22 billion. Okay. They've been slowly buying back shares consistently, so that's good. EPS pretty much flat, I'd say, since COVID. If we look at like 2019 as being their last like normal revenue, then they've just continued nice steady growth. So I'll say 2014 or 2024 is probably the normalized year. Okay, balance sheet. Okay, they're good. They're good on the balance sheet. Very good. And free cash flow. I mean, free cash flow, it's pretty stable. Stable. This is gonna go up and down based on how the market's looking. So, okay, let's go forecasts. Man, it is cold here. Why is it freezing? Oh, it is freezing in here. Are you hot? No? Did you turn down the thermostat? You did? You actually did? It is freezing. Okay, I'm gonna go get a jacket. It's like, it feels like it's like 65 degrees in here. Okay, so what do we got on our spreadsheet? So 918, that's somewhat close. Okay, we'll go 918 to 1120. Sweating here in Cabo? Yeah, I'm jealous. Yeah. I'm having like those cold sweats right now. Okay, 1120, 918. Okay. 1120, 918. Okay, that's annual growth of about 6.85%. So 6.854. Okay, times that by 0.7. That gives us 4.7978. 4.7978. That's yours. Why would I wear yours? No. Okay. So, T-Row price looking undervalued. Just a little bit. T-Row, that was one that I was actually really loving in the 90s. I did pick it up in the 90s, I believe. Let me see here. So this one like barely even went up in price, but look at, actually I bought it in the 80s. Look at this. Average price $86. So this one, whenever it dropped to a point where it's dividend, like I was buying it in here, guys. And that dip, this big dip. And like I said, this performs with the market. It's been kind of lagging recently, but I think like that's perfect for like people that invest like how I invest. Anyways, when this dropped down to below 90, like I was seeing that the dividend yield on it, which the dividend yield for this company is very, very stable, like really good. When I saw this dividend yield getting closer to like 6%, I was like, oh yeah, this is a massive strong buy. So I was buying up. PE was really good, like all of that. Yeah, so this is one of those. I think I'm honestly just gonna hold this for like quite a while. We got 21% return on it over how many months? Like 6 months, 7 months. In 7 months we got 21% return. Not bad. And that doesn't include the dividends we got paid. So we also got dividends on it. So where is it? Okay, so we got about $10 of dividends. Yeah. $10 of dividends from it. And we got, I guess, people shorting the stock, so I was getting paid 1 penny. 1 penny for the allowing the stock lending or whatever. So we got 1 penny multiple times, which I'm cool with that. I enable stock lending, by the way, on Robinhood, because like why not? Like if I'm long-term investing, like who cares that they lend my stock to people that want to short the company. Okay, got a nice push up in the portfolio, almost 1% up on the day. All right. Anyways, I'm gonna go grab a jacket real quick. I'll be right back, and we will move on to Mr. Car Wash. Okay, be right back.
Surely expecting the result of the Fed reverse repo operation. 40 counterparties take $2.51 billion at the Fed Reverse Repo operation.
All right, we're back. Had to go on a little scavenger hunt to find my jackets. Okay. Man, it is freezing. Freezing. The thermostat is set to 70, and it is still freezing. Okay. Mr. Car Wash. This is I think micro cap. Maybe small cap, I don't remember. Mr. Car Wash. 1.74 billion. So I think that would be small cap then. No micro cap. This is just one that I was kind of paying attention a little bit, because I like their business model, and they're like a growing company, but they've been kind of building up in the Pacific Northwest, so I've been paying attention to them a little bit. Like they're so small that like you don't even have Dataroma. Okay, ratios, EPS, free cash flow, pretty much the same. Okay, financials. I might honestly just delete this one from the spreadsheet. This is just one that I kind of wanted to track for a little bit because I was curious, but I am seeing them hit competition, and yeah, it seems like a little bit of like not that crazy good of a margin business.
According to the FT,
So,
bond
like,
investors
I
warned
don't
the
really,
US Treasury over picking
I
Kevin
don't really
Hassett
want
as
to
Fed
invest
chair.
in businesses that are too difficult. The less margin they have, the more competitive they are and whatnot, the more, whatever, the less attractive it is, I think, to invest. Okay. So they've been diluting shares. Balance sheet. Okay, pretty high debt. Yeah. Pretty high debt. They got some cash. But yeah, not the best here. Little scary on that one. Free cash flow. It's positive, I guess.
So a bit more into this
High
article, bond
depreciation.
investors have told the US Treasury that they are concerned about Kevin Hassett's potential appointment as Federal Reserve Chair, worrying he will cut interest rates aggressively to please President Donald Trump. The Treasury
They're
Department
selling
solicited
off
feedback on
assets.
Hassett and other candidates here in a one-on-one conversation with executives at major Wall Street banks, asset
High
management
capex,
giants,
and
and
they're
other big
selling
players in
off.
the US debt market, according to several people familiar with the matter.
Selling off assets. Yeah, honestly, this one's not looking great. Probably barely any forecasts. Barely any yet. There's only, well, 18 analysts. Wow. 18 analysts on this one. But I mean, we're talking like pennies per share. I mean, let's just look. Let's just put 10% per year. I mean, that's garbage. Okay, I'm deleting this one. Okay, next one, Anheuser-Busch. I think that's the beer
We've
company.
put out the article from the FT on the feed for those interested.
I think Bud, right? Bud. I think these are the guys that own Bud Light. Budweiser. Okay. Got a couple super investors. Okay, one sold off completely. Okay. They're pretty steady with inflation. Nothing special. Free cash flow compared to EPS, free cash flow is higher, so higher consistently. So we don't need our margin of safety for this one. Let's check financials. 122 billion market cap. Okay. What was margin? What were the margins? 55% gross, 12% net. Okay, it's not bad. Okay, nice and steady. They actually, oh my, they actually did quite a bit. So in 2008, they did a massive dilution of shares. They added 50%. And then since 2009 up until 2021, they've added another 30%. So they actually haven't been buying back shares like at all. No years where they've bought back shares. Well, I guess 2024 they bought back like barely any shares, just a tiny bit. So I don't love that. Unless they've been overvalued this entire time, then maybe that's good for them to do. Okay, total current assets. Okay, so they're a little bit heavier on the debt side. Free cash flow looks good though. That's good. All right, let's go to forecasts and see what the numbers look like. Okay, on our spreadsheet we got 299. Okay, on here we have 369. So I'm actually gonna use this number. Go 369 to 518. 369 to 518. 11.97. So no margin of safety on this one. 11 0.97. Okay. Showing as undervalued. So we're slightly undervalued, fair value of $78 a share, and we're sitting at $61 a share. That's fair value. Okay. By the way, this stuff up here, just so you guys know, this is all outdated. I need to update this stuff, just so you guys are aware. This is outdated. I need to update it, and then yeah. Which I could update it right now, but it's not really that important. Okay, let's check out block XYZ. And let's just take a moment real quick, just see if there's anything I want to remove, just completely delete. Okay, Boeing, I want to delete Boeing. It's useless. Kraft, Heinz, I'll keep that on. Okay, all these I think are fine. I think I want to like delete companies that are just like they don't have good margins or whatever. They have like kind of a lot of issues. I just want to delete them and not even have them on this list because like what's the point? Okay, so I'll just go one by one basically, and if there are issues, I'll just delete them. X, Y, Z. Okay, great growth. Not the greatest ROIC, but it looks like they've been improving recently. EPS got a massive boost recently as well. Yeah, let's look at ratios. This one will need a margin of safety. Couple super investors have it. Okay, 40% gross margin, 13% net margin. It's fine. Okay, financials 37%, 37 billion market cap. That EPS jump is crazy. Okay, shares outstanding. They just been diluting a lot. Okay, just consistently diluting. Balance sheet. Okay, net debt looks decent. 9 billion in cash. Yeah, they're looking really good there. So definitely not gonna go bankrupt overnight. Free cash flow looks fine, I guess. They must have had some kind of acquisition though. Let's see. Guess they didn't. How did they get such a crazy? Yeah. Heck yes. With some of that Parmigiano Reggiano. Yes, ma'am. By the way, the baby's now walking, like full on walking now. Like he just took like 20 steps, and he didn't fall or anything. He just took like 20 steps, and he's now over by me. Little dude is walking. Yeah. He's like making all these excited sounds. Little dude is walking now. Yeah. Yeah. That is my coffee. Good job, buddy. Okay. So XYZ looks decent. Let's jump over to forecasts. A little bit mixed there. All right, our spreadsheet showing 199. All right. That lines up okay, I guess. Let's go 241 to 529. Okay, that's 29. No, buddy, you're not allowed to touch that. You can't touch that, buddy. No, no, no. Uh-huh. Yeah. Okay. So that is 20. Sorry, I'm getting distracted. 29.961% annual growth rate. We apply our 30% margin of safety. That gives us 20.9727%. Wow, okay. Okay, you guys snatched up. All right, that gives us almost 21% annual growth rate for the next three years, and yeah, that's showing as if Block is undervalued, and Block's financials are pretty decent. So yeah, this is one that like you want small business and all that to be prospering. So this is one that maybe, you know, if we hit a recession or something, this one's gonna get hit a bit. But yeah. This one's nice. This one's nice. You should use stop losses and never move them so you don't blow accounts, bro. Yeah, I didn't move stop losses today, brother. I had one. I had one as a safety net. Unfortunately, I got hit my stop loss with news, and I got slippage this morning on that stop loss. I just re-entered long, and I leveraged up heavily to make back that loss and also get into a profit. And this sweep here liquidated me right here. This sweep. So this sweep liquidated me by 10 points. So my max loss was right here, and it liquidated me. So it's, you know, it happens. It's one of those things. Yeah, if you know the future, like, you obviously play it differently. I legitimately over here on this selling channel, I decided to close my position to wait either for a potential sweep or wait for a guaranteed breakout to actually fully enter. And the sweep came before I could close the position. So, you know, it happens. It's whatever. That's life. That's life as a day trader. It's gonna happen. The stop losses are to protect you from anomalies like news. Yeah, and it did protect me. I just for when I re-entered, I over leveraged. So my mistake there was over leveraging on the re-entry and not waiting for the guaranteed breakout. So it was a little bit of a bad entry, a little bit of over leverage. overall, it was really good. It was a really good play. It was just, you know, for the amount of max risk that I had, it was a little bit too much leverage. The play was like I was correct on the play. I was correct for like only going long, only all this. Like this was unfortunate here, that news, because without that news, we'd probably be up breaking 700 and whatnot on our way to like 800, 900 maybe. But that news came in and then we started grinding up. We chopped up a little bit, but like overall, you know, it's whatever. Overall, like the decision was correct and all of that. I got stopped out. I had an overnight trade, so I had an overnight trade, and it unfortunately missed 4 times. So there's 1, 2, 3, 4 touch points at this like 25,678 level. 4 touch points. My take profit was at like 25,692, somewhere around there. So my order didn't fill, and I had a stop loss set for this overnight low here, all the way down here. I had my stop loss. That hit, but I also hit slippage as well. Also, if I would have been awake, well, I was awake. I watched this live on my phone right when I woke up, and I wasn't able to do anything about it. But if I was at my computer, I would have reversed right on that news. So Financial Juice dropped it, and it probably was like up here when I dropped it. I could have reversed, capitalized on the downswing, and then waited for the long. Because my mindset is, since we're looking so strong overall, it's only longs. Only looking for longs the next, 3-4 weeks. Okay, back to this. We're now on to Dollar Tree. Dollar Tree is one that maybe I delete from the list, but let's see. Let's see how it looks. Is it DLTR? Yeah. DLTR. For the overnight, didn't you put stop losses, or your stop loss was more than you could risk? No, I had stop losses, yeah. I had the stop losses. I got slippage on the stop loss because the drop was so fast. Okay. Because I had a bit more leverage than I should have as well. Okay. Let's see. Okay. These numbers, I mean, they look all right. They look okay. It looks like this company, interestingly, dropped after 2022 and hasn't recovered. So key ratios. Whoa, what the heck is going on with this company? Their accounting is like all over the place. That is weird. Okay. Let's take a look, see if anybody's even investing in it. Okay, we got a couple super investors in it. Gross margin 36%, net margin 5%. So like typical for retail. 5% I think is decent for retail. Anything below 3% is probably like you don't really want it. So 5% is not bad. Okay. Let's take a look at financials. 23 billion market cap. Okay. Discontinued operations. What does that mean? Okay, I don't know what that means. But that's where the hit is coming in now. It's that discontinued operations, whatever the heck that is. Discontinued operations represents the earnings of a division or segment of business that a company wants to discontinue or dispose of in the near future. Okay, so whatever they're trying to dispose of is costing them billions of dollars. What the heck is this? What? This is something that you would have to read in the 10K to understand what this is, what's going on here. Because I have no idea. Because this is what is impacting their earnings right now. If they didn't have this, their earnings look fine. Okay, as far as shares, they've been overall buying back shares. Okay, overall buying back shares. Balance sheet. Okay. Got a little bit of cash, a little bit of that, this little bit of that. Free cash flow is fine, though. CapEx. So, trailing 12 months, they sold some kind of business for $420 million. So they sold something. Maybe that's their discontinued whatever. Maybe they finally disposed of what was burning their cash. Maybe. So cash flow wise, they're profitable. So are these only book losses? It looks like these are only book losses. Discontinued operations. Okay, that's weird. Well, I guess they're profitable still. Let's go over to forecasts. I guess those are just paper losses or whatever you call them. EPS 505 for us on here. Okay, let's go 555 to 743.
According to a White House official, Witkoff and Kushner briefed Trump after the meeting with Putin on Tuesday.
10.213. I definitely want margin of safety on this company. So that is 7.1491. Honestly, I feel like I should just delete this one out. It's kind of one that I'm not really interested in buying. Just way all over the place. Just not really quality. Yeah, I'm gonna delete this one. Okay, next up is Honeywell. Guys, that long is it's playing out. I'm telling you, only longs. Only longs. Who is still in the long? Drop it in chat. Who is still in the long? Because this has now basically come right back up to where it was before the news dropped. Drop it in the chat. If you're still long, drop it in the chat. We want to congratulate you. If I wouldn't have gotten liquidated right here, I would have been in the long still riding it up. You just got out? Nice. There we go into oil. Made 900. Nice. Good job. Good job. I would honestly still be even holding here. I would be targeting 700. But good exit. You took profits. I definitely would have taken 1 or 2 partials through here though. You opened a few at 25,450, closed one at 650, and have one more open. Nice. 450. Beautiful, beautiful entry. Beautiful entry. Nice job, Don. See, I'm happy when you guys do even better than me. I'm honestly happy. I'm really happy to see you guys doing well. Good job. Okay, let's jump back. So, we're on to Honeywell now. Okay. Okay, couple super investors in it. Gross margin 38, net margin 15, so it's not bad. Not bad at all. And, it has been kind of chopping a bit, and does look like it might be at a bottom. Okay. Revenue growth, honestly, not ideal. It's kind of stagnated. The company. I mean, APS growth is there. ROIC is okay. What are its ratios? I'm hitting ratios, by the way, but I'm not actually looking at ratios. I'm just looking per share. Okay, EPS and free cash flow. Pretty close, so we'll use margin of safety on this one. Okay, financials. $120 billion market cap. Okay. They've been buying back shares consistently. Very nice. Not bad. As far as the balance sheet goes, okay, 11 billion cash. Okay. Doesn't look bad. Free cash flow. Definitely stagnant. I mean, it's not bad, but it's definitely stagnated the past 5 years. 5-6 years, just stagnant. Okay. Let's look at our forecast. I'm going to be surprised if this is going to show massive growth. Okay, perfect. It doesn't. That's good. All right. So, we show 949 here. $9.49. Okay, that pretty much falls in line. But we're gonna go $10.38 to $12.16. $5.4%. 5.417 times 0.7. So our growth rate in here with the margin of safety is 3.7919. Okay, so still a bit overvalued for how we calculated it. And honestly, doesn't look as pretty as I thought it would. But it's not bad, but
At 2 p.m. Eastern Time, expecting Nvidia's Huang
not
is
crazy.
meeting the GOP
Not crazy
Bank
good.
Committee.
So if it drops down to like $100 a share, that's where we would want to buy. Okay, AutoZone. I'm excited about AutoZone actually right now. AutoZone is, oh, beautiful. AutoZone is like the GOAT. If you're looking for the lowest possible volatility, high return, AutoZone is where you go. Okay. Let's check out AutoZone. AutoZone has been like a straight up MVP. You're about to see some crazy numbers on this thing. Look at this return on invested capital. Over 30% for the past 10 plus years. Good revenue growth, good EPS growth, all of that. It's just crazy good. Okay, let's look at if any super investors got it. Yeah, we got a couple. One of them has it at over 11% of the portfolio. Okay, as far as margins go, 52% gross margin, 13% net margin. So not crazy, but it's good enough. And return on invested capital is super high. And we look at ratios. EPS, free cash flow. So it's a bit mixed. Some years we got higher free cash flow, some years higher EPS. Just about a little bit of flip-flop in there, which is like pretty normal. Like you ideally want there to be equilibrium at some point. I guess with some companies that equilibrium hasn't come yet. Okay, $64 billion market cap. Let's go to financial statements. Look at that. Look at that steady growth. Look at that. Okay. Look at that EPS. Look at that EPS goes so beautiful. Okay. Shares outstanding. Look at this. Look at how much they've been buying. How much shares they've been buying back. They've been buying back a lot. A lot. They've literally bought back over the past 20 years. They've bought back like 80% of their shares. Or like 70% of their shares. It went from 75 million shares outstanding to 17 million. Like, it's crazy. They're buying back. That's why their stock price just keeps rocketing and their EPS keeps going up. Okay, as far as balance sheet and all that, they're low cash. Not the greatest. They're like paycheck to paycheck type stuff, but they're honestly, if we look at cash flow, they look really good. And they're just consistently buying back shares. Look at that. Billions of dollars each year. Billions of dollars. As far as investments go, they're purchasing some investments. They got some CapEx. CapEx did go up quite a bit. So not ideal. Okay. Okay, let's go to forecasts. Look at that strong buy. You're gonna load. There we go. This is like a straight up low and slow grind. Okay, our spreadsheet shows 144.87. I think that lines up perfectly. 144.87. Yeah, 1, 2, 3. Okay, 144.87. Going to 233.74. Over 4 years, not 3. So that is a growth rate of 12.704%. We'll put our margin of safety on there. With this company, honestly, like with this company, I like would rather remove the margin of safety because this company, it thrives in recessions. It's like if we go to 12.704, which is the margin of safety, it's at fair value / like just slightly undervalued, and you're basically getting this return annually. So like you're most likely going to beat the market just like buying at this price. But we're going to just apply the margin of safety. Like if it does if it does drop significantly, like this is like I look at this as like holding a cash position with high interest payments. So that's just me. That's my opinion. Not financial advice or anything, but AutoZone has been one that rocks for like super safe-ish investments, in my opinion. AutoZone's been incredible. Very low volatility, very slow, just uptrend. And like I said, during recessions, AutoZone actually increases its sales. So it does even better in recessions. It's like their earnings just keep getting better and better and better. Okay, let's move on to American Express, AXP. This one's gonna be a fun one. Sorta. Okay. Quite a bit of super investors in this one, actually. Guy Spear has 22%. Warren Buffett has 19%. Wow. Okay. As far as margins, 61% gross, 13% net. Not bad. Okay. This one has been on the grind up, so I'm not expecting this to be undervalued by any means. Return on equity, nice. Nice. Okay. That's gone up. Okay. Okay, yeah. Past couple years, credit risk has increased a little bit. All right, let's look at financials. 250 billion market cap. Nice growth. Okay, shares outstanding. They've been buying back shares, quite a bit of them actually. Very nice. Balance sheet. Doesn't look terrible. $40 billion cash. Okay, yeah, they look pretty decent actually. It's not bad. And then cash flow statement. Yeah, they look good. Yeah, they look good. Okay. They look good. I do like American Express, like the credit cards especially. They're nice. Getting that platinum card, you know? Platinum card, gold card, all the cards. Let's see here. So we got 1490 on the spreadsheet. 1490, okay. Pretty much aligns. We'll go back to 3 years. And then let's go 1543, 1967, 1543, 1967. That gives us 8.429%. 8.429. Times 0.7. So that gives us 5.9003 with our margin of safety. So we're a bit overvalued on that. on American Express. So we would want to see over a 30% drop in that stock for us to be interested in buying. Okay, on to the next thing. Domino's Pizza. Domino's. DPZ. This is a stock that had pretty crazy run up, to be honest. Really good ROIC. I mean, this is insane. This franchise has had incredible performance. ROIC is just sitting above 50%. 10-year median, 52%. I mean, looking really good. Revenue and EPS growth has been looking really good. It just, whether you like Domino's Pizza or not, the company's been doing great. So, definitely not out of it. My stream is just randomly on. I'm hearing echoing, hearing my own voice. I'm like, what the heck is that? You're trying to add viewers. You're trying to view bot me. Okay. Okay, Domino's Pizza. All right. So that looks really good. Let's look
Nvidia's
at key
Huang said he
ratios.
just met with President Trump.
Key ratios, earnings per share, free cash flow. Okay, these are pretty close. These are close enough. So we can hold our margin of safety like regular. Okay.
Huang said he discussed export controls
Easy.
generally
See
in
who
Trump's
owns
meeting.
it. Okay, Tom Bancroft has 8%. Okay. 39% gross margin, 12% net. So not bad. It has had a little bit of a pullback, so maybe just maybe, potential buying
Huang says we
opportunity.
support
Let's
export
see
controls.
what we see. Okay, financials. $14.6 billion market cap. Actually smaller than I
Huang
expected.
says we can't degrade chips that we sell to China.
Okay. Nice steady growth on all this. Good EPS growth. Let's see here. Shares outstanding. Okay, they've been buying back very well. They've actually bought back 50% of their shares over the past 20 years. So very nice. Balance sheet. Ooh. That doesn't look that good. Okay, so they got 500 million cash. That's not great, guys. That's not great. They're a little bit leveraged, a little bit too leveraged, I think. What was their
Huang says
What was their
I don't
market
know
cap?
if China would accept
14.6.
H200 chips.
I mean, they got the income coming in. And honestly, during a recession, I mean, who knows? Probably more Domino pizza orders. People would be depressed at home ordering Domino's $5 $5 deal or whatever they have. Maybe they're safe in a recession. Maybe their income's safe. Free cash flow is looking decent. Yeah, cash from financing activities, look at that. So they're buying back shares, but they're also... Oh, and they're doing dividends? What the heck? They're also paying dividends? Come on now. What are you doing? Wow, they're like trying to do everything. They're trying to be like a dividend growth stock. And then like a full-on growth stock with the stock repurchases and trying to grow their business, I guess. Yeah, I don't know how smart that is. They're paying dividends and buying back shares. They're buying back shares possibly at overvalued levels. Unless they're timing it with dips. Maybe they're buying on the dips. Okay, let's see the forecast. I don't like that they're paying dividends though. I think that's not very ideal. with the ROIC that they have, like they should just be reinvesting. They should not be paying dividends. Okay. So on our spreadsheet we got 1711. Okay. 1711. Okay, that pretty much falls in line. Okay. 1711 2348. 1711 2348. Okay, 11.126. Do our margin of safety. Okay. 7.7882. Okay, so this thing, we got fair value of $332 a share. It's at $432 a share. So it needs to drop. Needs to drop about 25% for us to be interested. Just about there. But that one actually, yeah, it's not bad. I don't like their debt, but this one actually seems like a decent stock. So this one might be decent to even buy at fair value. Okay. Wow, like look how much a lot of these numbers changed though after recalculating. And there's a lot more to go. That's why whenever I asked you guys like who would even be interested in watching this, like this all it is. Okay, Microsoft's next. Microsoft. I'm curious with this one because Microsoft has pulled back a bit. That one came down from its all-time highs quite a bit. I think maybe by like 20%. So maybe there's an opportunity here. MSFT. So obviously huge amount of big institutional buyers. Okay, I guess I was mistaken. It's not 20%. It's only about almost 10% drop. Almost 10%. Actually, yeah, about 10% drop from the top. So not much one. Okay, ROIC is good, 25% over the past 10 years. EPS growth and revenue growth were really good. Okay. Let's take a look at our ratios. Free cash flow, EPS. So EPS has been higher past couple of years. Not ideal. So we're gonna use margin of safety. So what are our margins? Gross margin 68, net 35. And net margin's really good, 35%. Okay. Technically, we could make it. The thing is, you can make rules for yourself, like if margin is, at 35% or like above 20% or something, like only require 10% margin of safety, things like that. Like you could technically make rules for yourself like that, where it's like you adjust your margin of safety for how profitable the company is, which is smart. And that's pretty much all I'll say about that. That's smart to do. But I'm not gonna do it. Because I'm not trying to full on nerd out with all these things. Okay. Financial statements. Okay, good EPS growth and their shares outstanding. Okay, slowly but surely buying back shares. They actually bought back about 25% of their company over the past 20 years. Okay, debt is good. They're good here. They were, yeah, they're good here. Okay, cash flow, good, very beautiful. So all these numbers on Microsoft just look incredible. Okay, so forecasts, nice steady growth. So on the spreadsheet we have 1406. 1406, okay. So I'm going to use 1610, 2640. 1610, 26, 17.9%, 17. 0.921 times 0.7. That gives us an annual growth rate of 12.5447. So we're still a little bit overvalued. If we go zero margin of safety, just out of curiosity, we're sitting pretty much at fair value, just slightly under. Fair value is around $500 a share for Microsoft without margin of safety. So there's that. If Microsoft drops down to like, here's the thing. So I'm just gonna mention this. So I'm gonna unhighlight some of these. Yeah, health. I'm unhighlighting a couple of these. So these companies that are highlighted, these are companies that I actually am going to be fine at buying at fair value, because my fair value is calculated with a 30% margin of safety. So these companies that are highlighted, I will be fine with buying them at fair value.
PayPal shares dip in volume surge, last down about
So
3.2%.
that's what I'm going to do. I'm going to highlight companies that I think are really, really good financially speaking. Like, I feel like are safe bets. I'm going to highlight them. And whenever I have all this like set up, you know, if I see here Microsoft is at a potential return of like 0%, meaning it's at fair value or whatever, it's like, okay, I need to start looking to potentially load up. So, like for example, Nvidia is pretty much at fair value right now with my margin of safety. Okay, so it's there. So it's like based on like if I have those rules of like, hey, I want to probably start nibbling on these, like Adobe, for example. Like, look, Adobe is pretty much at fair value. You know, Meta, not there yet. It's to drop about 25-30% more to get there. But like we got Amazon that needs like about 10 more percent. We got Adobe that's at fair value. Nvidia fair value, I got it calculated at $176.80 per share. So just slightly above it, but it's pretty much there. So I'm gonna have these highlighted, and I think like that's maybe what I want to look for those like quote unquote high quality stocks. When they're close to or at fair value, maybe I want to start nibbling on them. I probably don't want to be just jumping, going all in, because more likely than not, I'm not gonna get crazy massive returns on those stocks. But I feel like they're a little bit safer returns wise, so I'm kind of like guaranteeing myself performance. Okay. Otis Worldwide Corporation. I have no idea why I have this in here. I have no idea what the heck this company is. But let's check it out. Otis Worldwide. What even is this? Manufacturer installation provision of escalator and escalator services. Okay. Cool. I'll just take a look. If it looks ugly, I'm just deleting it. Oh, baby's sad. Okay, watch out. Watch out. Bulls. Baby's sad. It's about to dump the market. Okay, ROIC is really nice on this, actually. And this seems like a newer company. Okay. What? They're already paying dividends? Why? Okay, let's see ratios. Free cash flow, EPS, okay, pretty much in line. Otis. Got a couple super investors in it. Gross margin 30%, net 9.4%. So not incredible, but it's a newer company. What do you think about OZ 200? Is it at fair value? I have no idea, brother. Are you going to trade today? I did. I got liquidated. I was trading. I was going long down here and I got liquidated on this sweep. So I stopped for the day. As of right now, I don't think there are any good trades to take. The trades that you needed to take are in this box for long. Now that we're up here, like, you know, the only thing I would be maybe, like, now that we're here is waiting for a potential dip into this box if it happens. That also aligns with a key level of 25,540 approximately in this bounces. Otis founded in 1853, or I guess it's a newer stock. I don't know if they IPO'd recently. I have no idea. Like, I don't know anything about Otis. Like, I don't know if they had some kind of divestiture or what happened, but they, like, this stock specifically is 2020 IPO'd or got whatever. Like, let's see. We have that information in here. Okay, let me just check this. Okay, I checked that already. We've got margins there. Okay. Overview. Founded 1853. When did they IPO though? Anyways, I don't know when they. It looks like they IPO'd during COVID. So 72K employees. All right. So market cap 34 bill. IPO'd March 2020. Okay, yeah. Slow and steady growth. Yeah, been slow and steady. Okay, net income. EPS growth decent. Okay. They IPO'd and then they're instantly buying back shares. So I don't even know why they needed to IPO. What are you doing, buddy? What are you doing? Thank you very much. Yeah. Walk it out. Walk it out. Yeah. Dude, he's like straight walking. He just started yesterday. Like full on walking, like not even going down to sit down. Right now he's just walking back and forth and crying. It's so funny. It's like he doesn't even know what he wants. He's just walking around. He wants to sleep. Oh. Go take him to bed. All right. Okay. Where was that? And honestly, it looks fine. Okay, balance sheet. Okay, they got quite a bit of there. Cash, 2.3 bill. Deferred income. Sorry about the background noise, guys. Baby's just sleepy. He's getting taken to bed right now. Your little cranky baby. Cash flow statement. Pretty flat. That's nice that we got pre-IPO cash flow information. A little bit of pre-IPO balance sheet action and income. Huh. But it's a bullish trend though. Maybe going long after a break from resistance would be safer. Whatever you think, Aziz. I think like entering long now is just not worth the risk. Could you show me where you see the stock buybacks? I don't do a lot of fundamental analysis. Stock buybacks, so a couple places you can see them. So on the income statement, you scroll all the way down to shares outstanding. And if you look, you know, throughout the years, if the shares outstanding is going down throughout the years, that means they're buying back shares. Another place where you can look is in the cash flow statement. It is in the cash from financing activities. So issuance / retirement of stock. If the number is negative, that means they're spending money to buy back shares. Okay. Anyways, Otis, a little bit, kind of a lot of debt for my liking. But let's go to forecast and see what we come up with. Man, analysts look like they're cuckoo bananas for this stock. Okay, we got 339 on here. Oops. 339.
So reminder, at the top of the hour,
406 to
Trump is to make an
559.
announcement. We'll pop out the video on the feed. It is on the left-hand side on the economic calendar.
559. 11.245. 249 times 0.7. Okay. 7.8743. So I mean it's overvalued a little bit. Honestly, I want to delete this one. I don't really like the financials that much. Yeah, that's not one that I really care to own, honestly. Okay. Got my breakfast burrito up in
So
here.
reminder with what Trump is expected to announce. He said to roll back US fuel economy mileage standards for cars and trucks. What had been tightened under the previous administration in support of cleaner vehicles and electric cars will be loosened. We have posted out the video on the feed for you to watch.
Also, is Palantir bubble still going? Yeah, I guess we could... Do I have Palantir on here? I don't. I'm not even tracking it. That's how bad it is. Okay, I'll add Palantir in here. Let's see, insert. PLTR. Okay. I mean, let's run Palantir real quick. I'll skip. Well, we'll jump to Palantir. Just to entertain ya. PLTR. Beautiful. We have one super investor that has it as 0.04% of his portfolio. Okay, gross margin 80%, Net 28%. So that's good. Very good. Too new to even know what the heck's going on. But decent revenue growth. Nothing super crazy. But yeah, it's decent revenue growth. And with that, decent EPS growth, which it only became profitable 2 years ago. Okay. Okay. Free cash flow is higher than EPS currently every year. So we're going to not use margin of safety for this. Okay. $415 billion market cap. My golly. All right. Let's look through it. So crazy growth, crazy growth. Average basic shares outstanding. They've diluted their shareholders quite a bit. So my golly. That Parmigiano Reggiano. So good. That was freshly grated off the wheel. Man, oh man. Okay, so getting diluted quite a bit. We'll go to balance sheet. Balance sheet, I mean, they have like no debt. They have a bunch of cash from diluting shareholders. Liabilities, like almost none. So don't even have to care about that. Cash flow, looking good and growing. Okay. So we got an idea. Everything looks totally fine. Like the company looks really healthy. The problem is, are we getting a good price buying the company? That's the real question. Are we getting a good price? Like the company's great. They're probably not going to go bankrupt. Like there's probably less than a 1% chance that they go bankrupt. It's just we as investors, are we getting a good price or a bad price? Okay, so we got 0.43 there. 0.43, okay, that aligns pretty much. So we'll go 0.43 to 137. 0.43 to 137. Okay, that's 47% growth. So I'm not putting a margin of safety on this. I'm just putting it in how it is, 47.147. And look at that, fair value of $44 a share. It is far from fair value. Based on the calculation I just did. So it technically needs to drop like 70 or 80% for it to be at fair value. So there you go. That's Palantir for you. All right, let's pop over to Johnson
So mine
and
in about a
Johnson.
minute's time. We'll surely expect to hear Trump to make an announcement.
We got so much more here, guys. I'm gonna take a break with this. This is too much. Let's actually really quick update the holdings real quick. Still don't understand how Palantir can go crazy high in a matter of 1 year. Just people being crazy. The thing about, like, you saw there's no super investors invested in it. There's one dude with a little tiny holding. Okay. Let's update the holdings here.
Apple top design executive Alan Dye is leaving for Meta. So Apple will replace Alan Dye with veteran designer Stephen Lemay.
Okay. Let's sort this largest to smallest. There we go. Look at that. So we got JD on the top, Elements Health second place, PayPal third, Comcast fourth, Booking fifth, surprised, SMCI sixth, Bank of America next, Pfizer. So not bad. We got a couple new things to have on the radar. Booking I think is one of them. That one was interesting. I was actually surprised by that one to be on here. 85% potential return for Booking. Their margins
The
are
Trump proposes
crazy.
dramatically
But
slashing
I don't
fuel
know,
economy
maybe that
requirements
one you'd have
through
to be careful because
2031,
it's
according to the
travel and
The
whatnot.
US
It
proposes to
probably
require
gets hit.
34.5 mpg
Probably
average
gets hit
fuel
if
economy by
yeah, if
2031,
people stop
down
traveling.
from 50.4 mpg
Okay,
under Biden
let's
rules.
update this. So I'm gonna
Seeing
do this real
WTI
quick.
crude January futures settle at $58.95 a barrel, up 31 cents, 0.53%. NYMEX diesel January futures settle at around $2.30 a gallon. Gasoline January futures settle at around $1.82 a gallon. Just waiting on the natural gas closing to come through.
Okay, I'm just updating my holdings on here so that we could get an accurate beta of the portfolio as well as portfolio value. Baidu. I haven't updated this in a while. Baidu, there it is. Baidu 4.04.
Further from the Transportation Department estimates, proposal would reduce average upfront vehicle cost by $900.
Okay, there we go. We got it updated. Let's see what our beta is looking like. Look at this. Beta of 0.91 on the portfolio. Do you see that? Man, and our performance has been decent. Okay. Actually, let's one sec. Let's get something real quick. Something real quick. Weighted return. There we go. Oh, thank you. That is so good. Did you try the cheese? It is so good. That's the best Parmigiano I've ever had. It's crazy good. I don't think I'm ever getting like pre-graded ever again. It's incredible. You should try it. Scale of 1 to 10. Don't even tell me. You didn't like it? 7? Wow. I can't believe you. I wouldn't have accepted anything less than 11 out of 10. That is crazy. All right. Let's see what our there we go. Let's see what our weighted return is real quick. So right now it is December 3rd, 2025. Our portfolio value is 9571.78. Okay. And I need to put what withdrawals we've had slash deposits. Okay, October 6th was my last one. Okay. So we had a withdrawal October 27, 2025 of 216. Okay. $31.
Seeing Apple extend declines as design executive poached by Meta. Apple shares down 0.6%.
Okay. And we had one more withdrawal. November 28, 2025. Okay, there we go. So annualized return 23.29. 23.29. With a beta of 0.91. Hey, not bad. Trump might be talking. Okay. Price moves so slow, then you get a drop or pop. Yeah. I mean, I was expecting for there to be a grind up today. Okay. So. That's what we're talking about right there, huh? So we got a 23.29% weighted annual return with a beta of 0.91. Okay, let's compare that to the NASDAQ and the S&P. So, NASDAQ. Okay, we beat the NASDAQ, right? Yeah, we beat the NASDAQ by 2%. And we had a beta of a lower beta than the NASDAQ. The NASDAQ actually has a higher beta, higher than 1 beta. Okay. So we beat the NASDAQ. Okay. And the S&P. We beat the S&P. Oh, look at that. We beat the S&P by 10% with a lower beta. Do you guys even understand how crazy that is? That's insane. Wow. I mean, guys, that's good. That is good. What about small caps? Wow, small caps didn't even perform at all. Guys, I don't know what to tell y'all. Like the performance we've had, like this is showing only 13%, but that's not the true return. And if I go to all time, it's not gonna be accurate because I was doing crazy investments over here. But either way, like, man, the performance is really good. Really, really good. This is like, you don't even understand. If you don't know what beta is, you don't even understand like how good our performance is so far. So I'm gonna keep, making sure to calculate all this stuff. I think I'm gonna be done for today for calculating this stuff. Take a break. I might do a live stream this weekend. Some of you guys said you'd be interested in joining it. Maybe tomorrow we continue doing some more, but we're about 1/3 of the way done with just the spreadsheet. There could be some stocks we could add to the spreadsheet. Still some stocks we could potentially delete from the spreadsheet. But yeah, today was a decent day. Okay, even though we got liquidated, today was a decent day because we learned some new stuff, found some new stocks that we may want to pay attention to. All right. As far as what happens now, I mean, I guess be careful, stay safe. It is currently just testing pretty much open. Well, pretty much pre-market, pre-news levels. So I'm thinking it probably breaks out here, but there could be a potential sweep here into power hour before it finally pushes up. So just be careful if you are trading this. If you have a bad average, this was the box to enter long. There's nothing else to say. Like, this is the spot where you needed to enter long if you haven't entered. So anything above here, like, you're risking it. You're risking drawdown. You're kind of gambling it. Here was the spot to enter. Okay. So yeah, I think that's about it. I'll reset, and we'll be ready tomorrow to continue the grind. And yeah, I appreciate all you guys. Thank you guys for joining me. It's been fun. God bless y'all. We can run the outro. I haven't run the outro in quite a while. Haven't run the outro in quite a while, so this is some sound, some music that you guys haven't heard in a little bit, huh?
Brent Crude
At least a
futures
couple
set around
days.
$62
Last week, maybe.
a barrel, up 22 cents,
So
0.35%.
today is a prime example. If you didn't see it this morning, you can rewatch it. I'm not embarrassed by it. It's whatever, because it happens. But today we got liquidated. And sometimes the market moves that way. That's why it's very important to watch your sizing. I had stop losses set up here, but I woke up late. I should have woke up earlier because I had an overnight trade that ended up getting stopped out, and I got slippage, and I got a re-entry into long, which was a very, very good idea. But guess what? A sweep took me out. So instead of waiting for the breakout confirmation, I entered long and levered up pretty quickly. Instead of waiting for it to break out and lever up on the breakout, I levered up, waited, and with this sweep got knocked out of the park. So the trade was still smart. Everything was correct other than position sizing. So that's just one of the things that, we got to learn. It's, if we're trading prop firms and we don't have millions of dollars of drawdown, that's just how we got to play it. We have to play it safe. We have to take on less risk than we would want to maybe ideally have on, and that's just the reality of it. So if you're in there, if you're nice and green today, congratulations. I'm happy for you. I know some of y'all definitely rode the longs all the way from down here, from the lower part of this box. Some of y'all maybe entered around here, but overall, it sounded like a lot of you guys were able to ride this out long, and I'm proud of you, and I'm glad you didn't jump in short. So appreciate you guys. Love y'all. God bless y'all. If you are red today, don't rage. Don't rage trade like I do, okay? Learn from me. Let me be the bad example that keeps you from making bad choices, okay? And together we will grind it out. God bless y'all again. I'll see you guys bright and early for New York session tomorrow. Thank you so much and take care. See ya.